All right, what's up, y'all? Today is one of the craziest days I've really seen for a very long time in the market. I mean, like everything we own is down. Silver's down 33%. I made a little watch list of stocks, I think, that are very attractive to buy the dip on. And we'll kind of get to this list in a minute here. But yeah, silver's down 33%, gold's down 13. So there's a little bit of action in the precious metal market. But yeah, check this out. Our main or well, not our main portfolio, our kind of risk on portfolio. It's not doing too well. We're only up 12.6. Ooh, sorry. Forgive me. We're only up 12.6% all time. We're down 2.29% on the day. That's mainly led by AMD, UiPath. We're down a lot on those. SoFi reported earnings this morning. SoFi's down 6.69% on the day. So, yeah, a few things are green. We actually bought some stock. Actually, one stock I bought today. I bought $100 worth of Progressive Corp today. This is that insurance company. You've probably heard of before. I really like Progressive for their numbers. Actually, let me analyze them over here on Moomoo. They added in some new features to analyze stocks, which I think is pretty cool. So yeah, here's Progressive Corp. This is an insurance company. So they traded these historically like low multiples. Check this out. The forward PE is a 12. I mean, a 12 PE, that's a pretty cheap valuation. You're not just like buying some crap, slow growing business. You're buying a really fast growing business. The revenue's up 12%. So the sales are up 12, but the net income is up by 25. Look at the net income, like compared to what it used to be. Like this is why Progressive Corp has done so well, kind of before today. Since 2019, it's been an incredible performer, but we're finally able to get this stock at an attractive valuation at a time when the numbers still look fantastic. They did $3 billion net income this quarter, which was $5 of EPS. Pretty insane. So yeah, I did buy $100 worth of Progressive today. That's that insurance company if you're looking for one. But yeah, what's up, Monkey D, Luffy, NO, Coraline? Hope everyone's having a great day. I know the market's a little red. Yeah, here's my Moomoo portfolio. We're down 2.25% on the day, mainly from Comfort Systems, Powell Industries down a little bit. To be fair, a lot of these, hit some crazy all-time highs yesterday, so I'm not too worried for this portfolio. But I am worried for my Roth IRA. Y'all ready for this? So my normal portfolio is down 1%. This is why I love being fully transparent. Our Roth IRA is down 7.5% on the day. So y'all don't want to know the all-time performance. We started this exactly a year ago, pretty much, and we're down 8%. That's from Cavco today. They reported some not so great numbers, so they fell 18%. I mean, I did not expect that. Oh, and InnoData is down 12% on the day. Cormedics is down 3%. So basically, everything's red except for our largest holding in here, which is why they're my largest holding because I love them. They're like a McDonald's. It's our HCA Healthcare Hospital Group. They're slightly green on the day. We're only up 4% all time in there, but yeah, not looking good for our Roth IRA today. So I have been buying the dip on some stuff. Oh yeah, let me get to it. One of the stocks on my list today that I think is a pretty good buy. I've been buying like a lot of, well, not a lot, but I mean, I bought like today and yesterday, I bought like almost 10 shares of Webull. Again, ooh, look at the short interest. So if you didn't know, 12% of basically all the shares of Webull are being shorted right now. They're at an all-time low today. And even though Webull's at an all-time low today, they're still expensive. But I love the company, and I think they're undervalued. Although they're expensive, I still own them, but as a super small position. And I can't stress this enough. With how the market is today, you can't make Webull a meaningful size position in your portfolio. But I do think if you have some extra change, maybe pick up a few shares of Webull. Here's my thesis on that one. I am a Webull brokerage user. So here's my Expo Webull account. I've been using their app for many, many years. And what they've gotten into recently, it says new next to this, they just got into crypto and prediction markets. And those are the high ticket commission, contracts where if you buy a stock on a brokerage, they don't make much, like 1 cent per transaction. But whenever you do this prediction market contract, they make 20x more in terms of how much bottom line they make from a prediction market contract and crypto too. So they just added in these two features, and I think it's really not priced in too much to actual Webull stock. So I'm just more bullish than the analysts are. But the stock's still expensive, although they're at an all-time low. On a technical point of view, maybe RSI, they look very cheap. But fundamentals, it's still a little expensive, but I love the growth here. Revenue's up 55%. Like that's the kind of growth you want to see. 55% growth, and the whole company's worth $3.5 billion. So I like Webull stock. I also like food too. I've been buying the a lot of Futu stock. I will say I sold AMD to buy, well, I sold a share of AMD to buy another share of Futu here in my Webull portfolio. So the next stock, I actually have a whole watch list here of stocks I think are very attractive. And then we'll look at some of y'all stocks. What up, CJin? Can you look at Hood, please? I'm cooked on Hood right now. Yeah, Hood, I'm a shareholder of Hood. They're even more expensive than like a Webull. I'm still up 620%. I sold and trimmed most of my position. Unfortunately, I had like 55 shares. Now I only have 5 shares left. But on the few remaining shares I have, I'm up 620% on Hood. Hood, it kind of goes with Webull. I love the picks and shovels plays. Every time, you do a contract transaction in Robinhood, they just keep a high margin commission. Same with Webull, same with Futu, same with SoFi. I'm surprised SoFi fell so much today. That's another stock I actually want to get to. You know what? Let me get into SoFi real quick, because that's another one I love to put on your watch list. And this is another one that, even though they're down 6.5%, it's not some steal of a deal yet. It's not super cheap. It's probably fair value here at a 37 forward PE. 37 forward PE is still a little expensive, but here's the number that is crazy on SoFi that leads to the stock going up so much. It's their financial services business. This is the kind of growth you want to see when you're, just buying and holding a growth company. Like, to justify that high forward multiple, the high PE, they need this sort of growth, and they have this growth. Like, no analyst expected this. We can actually see the analyst expectations. Every quarter they beat on revenue, beat on EPS, which is net income. So pretty impressive stuff here on SoFi. I think that's why people are starting to take them serious. Like, they really do make over 100 mil in net income a quarter. The business is growing. I mean, they just reported earnings too, and they're down. They were initially up, like 6% pre-market, but then they fell. They had a lot of crypto news. They were like, I was reading in the news tab here. I was like scrolling through all this, SoFi rolls out stablecoin. CEO pushes Congress for Crypto Clarity Act. We're uniquely positioned to benefit from crypto. Okay, pretty cool. So anyway, that's SoFi. I wouldn't go crazy. I'd lightly buy the dip. I'd nibble on SoFi and Webull, but I would not go crazy in either of those stocks right now because they're still not cheap enough. But one stock that is cheap enough to go crazy into, like to buy the absolute dip on, in my opinion, not financial advice, is actually Microsoft. They're at a new 52-week low today, and they are dog cheap. I can't believe it almost. They're at a 24 forward PE. The current PE is a 27, but the forward PE is a 24. They had a one-time adjustment to their net income, technically. Like, says they made $5.16. They actually made around like $4, but it was still a big beat at $4. But anywho, is this the updated number? So this does have the updated numbers. Okay, so here's their software business. Their largest segment here grew 15% year over year. Incredible. This is their Office 365 software. For the full year 2025, it did 120 billion of annual revenue. I mean, just insane. And not just that business, but also their intelligent cloud. Their Azure cloud grew 28% year over year to 32 bill of revenue. That's nearly the same as AWS now, which is insane. And that also does over 100 billion of annual revenue a year for Microsoft. So they really do print money. This is the kind of this is the after-tax number. Again, they didn't make 38 billion. They made around 30 billion. They had a one-time adjustment from like a OpenAI, like ChatGPT realization of their valuation or something weird like that. Anywho, it doesn't matter. Even when you exclude the one-time adjustment, it's an incredible stock. So yeah, Microsoft, NVIDIA, and Amazon discuss investing 60 billion into OpenAI. So Microsoft-backed OpenAI launches enterprise AI suite to compete with Anthropic. Okay, cool. Microsoft secures 750 million Azure cloud deal with Perplexity. So anyway, like every company in one way or another uses Microsoft. They're investing a lot into the future. They're investing a lot, 20 to 35 billion a quarter on, GPUs, new assets, stuff like that. But this is a great company to buy the dip on. Like, it's 24 forward PE. You can't make it up. It's super cheap. I know they're boring, like it's Microsoft, I know, but they're really great. They really are. Thoughts on Oklo right now? Yeah, that one I wouldn't even touch. That's one of the, this is a nuclear startup. They make SMR, small modular reactors. Well, I say they don't make yet. They're a startup. So they don't actually plan to make any revenue till 2030. Out of all the nuclear names that exist, this is one I would not buy, sadly. So if you go to the revenue right here, it says no data because they've never sold anything. They never sold a product or a service. They're not supposed to make any revenue for another couple of years. So it's just hard to justify a $13 billion valuation for a company that just loses net income every quarter. It's like a tough story, just like TMC. This is that underwater robotics company. They make these underwater robotics that suck out the like nickel and like zinc from the water, and then they sell the precious metals. But they're still a startup with no revenue. I'd love to see them like 5x, and then I'll buy them if they can actually have some successful results. But it's just too much risk to pay for right now's valuation. I have a stock that I think you'll love actually. So it's another one on my list. They're at a new 52-week low today. Check this out. This is ticker symbol Dave. I'm so glad I get to introduce you to this stock right here. If you've never heard of Dave, this is a fintech right here. They're very cheap. If you look on the, let me pull up the PE ratio. On the right, they're at a 13.5 forward PE. The current PE is a 16, already cheap, but the forward PE is a 13. And look at the market cap too. This is the cool part. This whole company is only worth $2.2 billion. $2.2 billion company. And check out this revenue growth. It's exploded these past couple quarters. So that's the revenue growth. The revenue's up 62% year over year, but look at the profits, the net income. It was a tough buy a year ago, but now they're finally making insane amount of profits to the point where their net margin, they had a slight one-time adjustment, it says 61, but they really have like a 25% net margin. That, as you can tell from the forward PE of a 13, they're really supposed to make, they're still supposed to grow this an insane amount. When the profit goes from 2 million to 45 million year over year, the growth is most likely going to just continue. Like the sales are up 62, like everything's headed in the right direction. They're deleveraging the balance sheet, which as you can see, the assets are growing and the liabilities are shrinking. So their leverage ratio, kind of the asset to liability ratio, is only a 32 versus a 42. Oh, and the free cash flow, dude, this might be the most impressive part. Let me pull up the actual free cash flow. It's pretty much the same thing. Because they have like no expenses. So the free cash flow is just up and to the right, hits a new record every year, every quarter. So this is a cool growth name that makes real profits. That's kind of cheap. Full disclosure, I do own this one and I'm up over 100% on Dave, but I do really like them. I don't know what TikTok's telling me auto post, but you know what? I'll hit post and see what happens. Uh, I don't know what that means. Okay, let's look at some more here. Man, I lost 5K on silver today. Dang, that sucks, man. I'm gonna just hit well, you know what? Let me not do that. I'll do that later. Okay. Full disclosure, I do own Dave, and I'm up over 100% on them. I've kind of been holding them for a while, but the valuation is super cheap on Dave right now. It's not one, of course, you'd want as a meaningful size position. That's why they're only a $600 position for me. Like there's stocks I love out there, like PSIX, Iron Mountain, and CHRW. Like I love these stocks, but I don't want to trust the meaningful position of my portfolio at their current valuation into them. Hey, silver's having a little bit of a recovery. They were down 35. Now they're only down 27. But okay, let's look at some of y'all. Oh, I see Duolingo. What's going on with the Hood? Hey, should we look at Hood stock? It's probably just following whatever SoFi's doing because SoFi tanked. SoFi is down 6% today. Oh, Hood's almost green. I mean, Hood's only down 0.5% on the day. So that's not too bad of a day for Robinhood. Let me know if we should get to Robinhood stock. We can definitely check that one out. So I'll do Duolingo real quickly because I saw people asking about them. Micron is an absolute beast. Hey, should we look at Micron too, Agent? What's up, Craig? ACAD, what's up? Hope y'all are having a good day. I know the market's not too green today, but at least we get to potentially buy the dip on some great companies. So all I've bought today was a little bit of Progressive and Webull stock, ticker symbol Bull and PGR, but only the slightest bit. I spent like $150. So I'm not going crazy on the dip yet. So here's Duolingo. New 52-week low today, pretty concerning, And this is another one. Even though they're at this 52-week low level, I sadly think Duolingo could fall another 10, 15%, but not much more than that. I mean, so they had a total one-time adjustment to their EPS this quarter. It says this quarter the EPS was $5.95 on the right there. It wasn't actually. It was nothing near that. So that's why the right now PE is a 17, but the forward PE is at 30. So in this environment, I feel like Duolingo could maybe sadly stretch down to like a 20, and it would be I don't see it going much lower than this, but it could maybe go down to like a 27, 26 forward PE, maybe send this down another 15, 20%, but I don't see it really going much cheaper than that because it's not just some software name I'm ignoring. I love Duolingo's numbers. I mean, they're a subscription model company. It's that language learning app, and 85% of the revenue is their subscription business. And just check out the growth here in the middle. This is why I do like them. The year-over-year growth rates are always 40 or 50%. It's up 45% after 48, after 46, after 45. So insane amount of subscription revenue. And if you don't pay for their subscription, you see ads, and their advertising revenue is up 46% year over year. So both businesses are booming on Duolingo, but I sadly think the valuation could go down maybe another, or the stock could go down another 15, 20%, but not much lower than that because like this revenue growth, like it deserves some attention. Like, but here's the thesis. Here's the AI thesis that's really hurting Duolingo. You pay for their subscription to learn a new language. Maybe in 10 years from now, you won't need the skill of learning a new language because the AI meta glasses or the live translation technology is so good that you just don't need to learn a new language. You can communicate but maybe that future is way farther out than we think. And that's one of the reasons Duolingo is falling. They also fell 10% on the day, or 8% when OpenAI said they're making their own language learning app that's free. So there might just be some real thesis issues on Duolingo, and I think that's why the multiple is kind of compressing. And even though they're at this new 52-week low, they're not super cheap. So I would maybe nibble on Duolingo, but I wouldn't go crazy yet into them. But I do really like that subscription revenue growth, the advertising revenue, they're beating every expectation every quarter. It's not like they're missing on their numbers. It's just that thesis that's hurting them. Hey, try not to spam in chat there. Oh my goodness. Hey, we'll try and get to all these stocks. Give me a minute here. We'll come back to that one. So let's see what else y'all got in chat here. Is Path good to buy right now? Ooh, I don't love this one either. It's kind of it's a software name. They are cheap. I've been let me show you. I've been bag holding UiPath. So I know every single bad news that's ever existed from this company since they IPO'd, because I bought their IPO. If you look at the very bottom right, I bought these first shares in 2021, and it's 2026 now. So I've been holding UiPath for dang near 5 years, and we're down bad on them. From the CEO quitting out of nowhere, leaving the team for dead, to losing a lot of contracts to Snowflake and Palantir. Snowflake and Palantir are really going for the enterprise and the government contracts, when UiPath is helping out the small and medium-sized businesses. They're cool because they integrate into Slack and all these. They're really for developers. So they're not actually. I love them for their net cash. If you look in the top right, the whole company's worth $6.8 billion. Here's the cool thing: UiPath has 1.4 on the very left there, $1.4 billion of cash and no debt. So roughly 20% of the market cap of what you're paying is just their cash on hand. Plus they make interest on that every quarter. Let me pull up the exact metric. Yeah, they're making around 10, well, they average out 10 to 12 million of just interest on their cash a quarter, which is kind of cool. That helps out their bottom line. It has been helping out their bottom line. So yeah, another thing, it says this quarter, it says they made 198 million in net income, record net income. They didn't actually, they're just now getting profitable. So if you buy UiPath now, you're basically buying them just as they get profitable, because here's their actual profits right here. They made 13 mil of profits to Pat. But look at these year-over-year comps. That's the growth you want to see. They've significantly narrowed their losses. I can see why the stock has struggled so much from its IPO, because they've been burning 50 to 100 mil a quarter, but now they're actually getting super profitable with 20% of the market cap as cash, and potentially they have this new OpenAI partnership. I would just be very cautious with UiPath because they've just disappointed me. All right, what's up, Orte? Am I the greatest trader ever? User 3, you probably are. Super Microcomputer, let's check out this one. Super Micro is CEG a buy? Ooh, we got to look at CEG. What up, Young Bar? Dat one dude. I was so close to buying a share of CEG today, and I'm thinking I might do it. And what up, Good Time? We got to get to Netflix too. Netflix for sure. So Super Microcomputer, they do a commodity. They just install your server chips, or your chips in your server racks for you. So they're cheap. They're at actually the forward PE is a 13, so they're expecting a lot of EPS growth. We just want to hope they don't miss on these projections like they have been. They missed bad this quarter. They expected 5.8 billion in revenue, 5.8 billion. They only needed 5 billion of revenue, and they've missed on net income the past few quarters. So what we're seeing on Supermicro is a margin compression issue. We can see the revenue is supposed to go back green, I'm pretty sure, but revenue's down 15%. That's already not great. So the revenue's down 15% year over year. So the revenue's down 15, but the net income, the profits are down by 60% year over year. So what does that mean in English? That means margins are getting crushed. Gross margins are down by 30%. after they fell 21% the year before. And the net margins is down 53. Look at these year-over-year declines on the bottom. That's just not what you want to see. And I think that's why Supermicro has kind of not been doing too well. Dell is really getting into their space too. So Supermicro is actually I was reading into this, they're like having to give these customers these bulk deals that really lowers their margin to keep up with like Dell, and because they just do a commodity. But the future expectations are really great. Like the revenue is supposed to double just quarter over quarter from 5 billion to 10 billion. And the EPS is going to go to 43 cents. So, you annualize 43 cents, that's $1.20. That's how they get to this 13 forward PE. So maybe they are at a 13 forward PE. But I think they're at a low valuation because of that margin compression issue. But maybe that'll fix. So that's kind of what you're betting on. Will it fix? Will it not fix? Who knows? Because the next 2 quarters the expectations do look good there. But I would be careful. What's EPS? The EPS is just the net income. It's the net income per share. So basically, the only thing that changes the per share is either if they issue shares or dilute you. So basically, it's just the net income plus any share buybacks or dilution. So EPS is just net income. Stocks rarely dilute that much ever or buy back stock. So Netflix is in one. I'm really bullish on the advertising space, and Netflix is a good advertising place. They switched their model from purely subscription to now there's like 2 different tier subscriptions. There's an ad tier subscription and a normal subscription. And they're making a lot more money on their ad tier subscription, even though it costs less for the consumer, which is pretty cool. But yeah, Netflix is really cheap in terms of valuation. On the right here, this is what really interests me about Netflix, and it's worth buying now as a small position to nibble on right now. And you slowly dollar cost average into them to make it a bigger size position. But the forward PE is a 26, which means they trade at 26 times next year's net income, which is very fair. It's a pretty simple business model to understand. Subscription model. They have 300 million premium subscribers. They make $11.69 per month per user, and they print net income at the bottom here. They easily make around 2.5 to 3 billion of real after-tax net income. It's pretty insane. Alvo says, what the app? Yeah, hey, if you want to get this app, it's actually a brokerage software. It's in the link tree in my bio, the very first link there if you want to get it. So broker called Moomoo. But yeah, one thing that's really hurting Netflix's valuation, their PE ratio, is this Warner Bros. Discovery acquisition, because they're trying to buy Warner Bros. Discovery for $82 billion, but they have another bid from Paramount Skydance that are bidding like 90 to 100 billion. And every time the cost goes up, it's going to be even more decretive to Netflix's EPS. But Netflix does really seem like they want to pursue this acquisition, which I think would be good. Whether or not they do the acquisition, Netflix is cheap. It is. I think the risk reward is very fair. Like I really don't see it going down more than like 10% more than where it is today. Like I couldn't see Netflix at like a high teen multiple. So unless something crazy happens with Netflix, but their valuation does look good. CEG and we'll do Micron. Ooh, should we do Micron first? And we got to get to Western Digital. I know, there's a lot of stuff happening with the what's it called? The memory shortage plays. So yeah, Micron right here is the main beneficiary of this memory shortage. So, and I'm about to say something crazy, even though they're at this crazy all-time high, on a technical point of view, you get called crazy to buy Micron. I expect Micron to probably crazy enough is not done. I think they're probably going to go up another 20-30% before the rally really stops. And I'll show you why in a second here, but I want to pull up this memory shortage kind of thing here. Yeah, Micron positioned to benefit from AI-driven memory super cycle. Okay. Okay, let's just go to their numbers, because this is the crazy part. If we look at their current EPS, look at this EPS right here. It's been insane, the growth. This quarter was a record. $4.60 of EPS, which was a record. $4.60 of EPS is the same as $5.3 billion. It was $4.60 this quarter. They're expecting next quarter it to be $8.20. And then the quarter after, $9. So if you annualize that, that's $40 of yearly EPS nearly. That's where they get this 11 forward PE. I really feel like Micron could really stretch up to a 13 or a 14 forward PE, send this up another 30% before it really starts to get expensive. Just that EPS growth, it deserves this sort of stock price appreciation. That's the formula. If your EPS is literally going from $1.60 to $9 year over year, that that's where you get this massive stock price appreciation. And I don't think it's done. I mean, I wouldn't certainly it's not too attractive to buy today, but that's kind of my thesis there. So here's a stock I love, and I mean, I might even do it on stream. I might legit buy a share of CEG. This is my favorite utility stock ever. Out of all the utility stocks that exist, this is my favorite one to buy the dip on. I think they're going to be the growthiest, and they're on a pretty attractive dip. They're down 23% year to date. I'm still up 36% all time. So I've owned them for well over a year. We've gotten crazy dividends from. Oh yeah, there's some of our dividend history there. I love CEG. So this is the number one nuclear reactor play. They literally own 30% of all the US's nuclear reactors. It's the largest, purest nuclear play. There is no close second. And if we go to their valuation, the forward PE, that's what I think is pretty fair. It's a 25 forward PE on Constellation Energy. And if we go to the EPS projections, they had a little adjustment there, but it's going to be, $2.80 every quarter on average. Or it kind of looks better on the EBIT to kind of flatten out the adjustments there. But yeah, the revenue is going to go to $10 billion. They just acquired Calpine, and this Calpine acquisition is accretive $2 to the yearly EPS, which is so insane for Constellation Energy. So I have nothing bad to say about this one. There is some news that the administration's trying to this is an unregulated utility, so they can charge whatever they want, but they're almost trying to regulate the unregulated utilities by making corporations sign 15-year deals instead of charging monthly. So that's kind of why they fell so much that day right here on no earnings report. It was that PJM auction cap pricing, but it hurt all the PJM names, like a Vistra Energy too. So Vistra Energy, I think, is cheap. They own 5 nuclear reactors. They're at a 16 forward PE. CEG is the number one. I think Berkshire Hathaway might be number 2. Berkshire Hathaway Energy, which is part of Berkshire Hathaway. Then it's Vistra Energy. Okay, let's look at some more. What up, Sam? Hey, thanks for that gift there. Good to see you, man. Appreciate that. Critical metals, yeah, dang. Y'all saw silver today. Silver was down, or what's it down? 26%. It's had a pretty crazy day. It went from 106 to right now 77 schmeckles. It's unfortunate. Hey, I'm still learning. How do the charts work? I don't understand. Well, hey, hopefully I can explain it. By the way, watch out for people impersonating to me. I sell nothing. I don't have a course or book, or I don't coach. There's no way to really learn from me except just watch the streams. If you wanted to. If you wanted the follow button, I appreciate that too. We try to stream every day. We just look at your stocks and we analyze them. I sell nothing. Just on here, give my opinion. Castro said Oracle. Let me do Oracle right here. I also saw Roblox. Yeah, Roblox. Weren't they down let me go to my watch list really quickly. I think I saw something crazy. Oh, AppLovin's one we had to get to. That was on my watch list I wanted to analyze. AppLovin's a super attractive one. That's a much better buy than Roblox, in my opinion. Yeah, Unity's down 23. I wonder what the exact news was, but Unity's down 23. AppLovin and Roblox down 13 as well. Yikes. All right. So here's Oracle right here. They own 15% of TikTok USA. Hey, no way, Sam. Yeah, I am in Trevor's server. Yo, are you that guy you're that man with the blue profile picture? I think I know who you are. Yo, good to see you, man. But yeah, Oracle right here. Yeah, check this out. Oracle joins TikTok USD, and they own 15% of TikTok now. One thing that's really being questioned, though, on Oracle is how much debt they have. They have over $100 billion of debt, and they have a high dividend yield. That does kind of suffocate them a little bit. They had a one-time adjustment to their EPS this quarter. As you can see, analysts expected $1.17. They didn't actually do $2.11. They slightly missed on their earnings before interest. So anywho, they're on average making we'll give them the benefit out, $3.5 billion in net income a quarter. So they're making $3.5 billion in net income a quarter, and they have a dividend, and that dividend cost $1.44 billion in net income a quarter. So they do have kind of a high dividend payout ratio and a lot of debt to pay, over $100 billion of long-term debt plus short-term debt of another $20 billion. So they have to basically, here's kind of the thesis here. They have a huge backlog. I think Oracle has $300 billion in backlogged orders and what's it called? Retained performance obligations. $100 billion of it's just from OpenAI. But they have to basically spend $60 billion to get the $200 billion. They have to spend an insane amount. So Oracle is a cloud play. They actually have the 5th largest market share. The number 1 market share is AWS, then Azure Cloud, then Google Cloud, and then it's Oracle. So they're at a 30 forward PE. I kind of like my cloud, my pure, Oracle's a bit of a pure cloud play. Obviously, AWS is like their biggest business, but Amazon and Microsoft aren't a pure cloud play, but that's how I get exposure to cloud. I really like Oracle, or I really like the cloud business industry, but I don't love Oracle's dividend payout ratio. They just don't have the fundamental strength I think Amazon does. Yeah. Oh, remaining performance obligation. Hey, thanks for that, Sam. Yeah. Sam, if you got a stock you want me to look at, let me know. That's kind of what we're doing right now, analyzing people's stocks. Best quality watches stocks getting cheap. Hey, what up, Brian Paul? Shout out to the member, Brian. Good to see you, man. Hope you're having a great day. I know the market's a little red today, but you know, there's some deals out there. I bought a little bit of Progressive stock. It's like an insurance company today. A little bit of Webull in my Roth IRA. Our Roth IRA is down terribly today, down 6.7%. So drop a like on the stream for me there. We're down pretty bad. And I think your AMD's down on some like chip delay thing, but analysts are saying it's not true. UiPath is down. SoFi's down. So oh well. Ooh, FRSH. Okay, let's try a FRSH stock. So is that Freshworks? I don't know if I don't remember what this company does. Dang, look at that. They're at a new all-time low pretty much. Yeah, that's an all-time low today, or they hit an all-time low pretty much right at it. So they're a $3 billion company. Let's see. That's right around Webull's market cap. Let's see. So they're growing double digits. Revenue's up 15%. Do they make money? So they're super close to net income positivity. I mean, look at how they've narrowed their losses. I mean, they're basically losing no money. I mean, they lost 4 million, 1 million. They can easily afford these losses. So probably by the same, it was a tough buy probably, a couple years ago. They were losing 30, 40 million. But look at the trend here. I bet by the same time next year, they're most likely going to be EPS positive. So it's kind of tough to do a forward PE multiple on this one. Are they, the cash flow looks great too. Are they buying anything? No, but the cash flow looks great here. Yeah, record free cash flow right now as well. So maybe we can check out their website real quickly. Freshworks, just so we can get a better idea of what they do. So kind of like some software, maybe enterprise software business. AI assistant kind of thing. It almost reminds me of like a Zeta, almost first contract resolution. So anyway, they're asking for my cookies and it lagged there. Well, anyway, there you go. So there's 74,000 people using them. Anyway, have they been beating on expectations? Let's see here. So yeah, look at that. That's kind of what the analysts are expecting. 208 mil, they did 215, and the expectations are up and to the right. And yeah, so that's what's so impressive about the net income losses narrowing. That really beat expectations. They were expecting them to lose 6 cents. They only lost 2 cents. That's a big improvement. And that, big beat on just basic EBIT right here. 32, they did 45. So pretty impressive stuff. And so it's not like they're at an all-time low because they're missing on their metrics. They're at an all-time low because all of software is just getting crushed right now for some reason. Actually, I had a whole list of software names I just did a video on right here. All these right here: Fortinet, DocuSign, ServiceNow, GoDaddy, Salesforce, Adobe, Duolingo. They're all at like 52-week lows right around today. Webull's at an all-time low today. So I bought the slightest bit of Webull. You definitely don't want to have that one as a big size position. Well, look at their price target. Oh, my bad. I missed that. What is this app? All these brokerages are all in the link tree in my bio. I'm not sure which one you're talking about, but the one I'm on right here is called Moomoo. We use my affiliate link. It's the link tree in my bio, first link there. Ooh, should we do Salesforce? I know that one's on a massive dip. I said I want to get to AppLovin because this is a quality name. If you look, like a lot of people kind of overlook this one, but just because they're always expensive, like they've always been Palantir type expensive, but they have some of the best numbers I've ever seen. Is there actual news on why they're down today? I don't think so. Like there's not any specific sort of news. I know just Unity's down 25%, but here's AppLovin. This is why you should at least put them on your watch list. You can't make up the growth over here. So the revenue is up 68% year over year. So the revenue is up 68 and the net income is up by 92. This is why AppLovin deserves all the hype around them. They deserve all the stock price appreciation because of how they've grown their EPS so massively. They're going to be making, based off the next 2 quarters, over $1 billion of after-tax net income. This is the before-tax number. They made 800, or no. This is the after-tax. The before-tax number was 1.08 billion, and they netted 835 mil. So that means the margins are a 60%. It was already crazy at like a 40, 50%, but they just continue to grow their net margin. I don't believe it. Like every day, and the same with the free cash flow. The free cash flow was $1 billion. Like this is a money printer. Like Reddit type margins, incredible 60% net after tax margins. And look at the EPS projections. Like it's not supposed to slow down. It's supposed to go from $1.67 to $3.15. It's never even been close to $3.15 before, which is another 30% increase. I just can't believe it. So they're expensive though. Let's see what their forward PE is. A 36. You know what? That's actually the same multiple as a SoFi. I got to re-add them to the top of my watch list because I've really wanted AppLovin in my portfolio and I might get the chance to. So there you go. Hopefully AppLovin was kind of a cool pick there. Can you please check out Joby, said Tyrant. So I don't love this one. Dang, they're down 4% on the day. Yeah, they have to issue. Look at the top here. They're issuing more shares. Here's why they keep diluting you. They didn't fall on some earnings report. They fell because they diluted you because they're still a startup, I believe. If we go to their revenue right here, they got their first ever sort of revenue this quarter. That's actually, see, the last time I looked at this is what I was dealing with. A company with no revenue, $15K of revenue, $55K, basically no revenue. But now they have $22 million. What are they expecting? Okay, so it's supposed to go to $16 million. Well, it's good that they finally have their first ever set of revenue, but it's tough to pay. Even on the dip, it's a $10 billion market cap for, look at see, this is why they have to issue shares, because they lose a couple $100 million a quarter. So how is their balance sheet improving when they have no revenue and lose a couple $100 million net income a quarter? Well, it's sadly from them diluting you, from just basically cash and financing activities. They just issue shares. This isn't issuing debt. This is all stock issuance. But interesting note here. Kind of cool. They're kind of backed by Toyota. Toyota Motor owns 14% of all the shares, but I'd be real careful with that one because it's just so expensive because they're just now making revenue and they lose a lot of money. It's like a very intense, like the end net margin game isn't too great there, I think. I'd be super careful with Joby. I keep it as a small size position, and those are okay to have. Like I have many of those positions where I like the business model, something interests me, but I only keep it as a couple $100 size position because I just don't want too much like exposure to it. Meta did great. Yeah, dude, Meta. Check out Ding Nickel. Hey, what's the hey, if you got a stock, give me a look at Potness, give me the ticker symbol. We'll definitely check it out for you. SanDisk, you know what? Yeah, I saw the memory names. Oh, wow. SanDisk has had an all-time high. Did they report earnings is what they're saying? So they did. This is what's crazy on SanDisk. If we go to the EPS projections, they crushed it. This is why SanDisk deserves this all-time high. It always is the numbers that explain it. And this also explains why even at right now's current price, SanDisk isn't crazy expensive. Here's why, which sounds crazy, but they expected $3.19 of EPS. They did $5.15. That's a 40-50% beat. If they beat this much this quarter, what are they going to do in the next quarter when they expect $4 and $5? So, $5 annualized, actually, we should even do more than that. Almost like a $25 annual EPS. That puts the forward PE at a 32, which is still actually pricey. Micron's at an 11. Micron's really cheap, actually. But at 32 forward PE, it actually is expensive. But with these kind of growth rates where the EPS beat this massively and the revenue there's basically, wow, they beat by basically double on the profits. Wow. Okay, SanDisk is that memory shortage company, just like Micron. XYZ stock. Okay, this is just like PayPal. So these two stocks almost look identical. So here's PayPal. Look at it on the weekly here. Like here was 2021. They rallied up like crazy. And now, sadly, PayPal is the same price that it was in 2017. PayPal owns Venmo. Their biggest competitor kind of is Cash App. And Cash App has done the exact same thing. Hey, Lexi, or Sexy Money. Dude, thanks for the 5 cats there. I appreciate those gifts there. I do appreciate that. But yeah, XYZ stock is also the same price that it was in 2017 because I guess they're just in the same industry, kind of being out innovated right now. So yeah, they're 62% of XYZ's revenue is Cash App. And unfortunately, it looks like Cash App is negative year over year. So that's not great. The growth is gone for Cash App. Let's see what the profits are. I know they're still printing money. Yeah, check this out. they're making a couple hundred, usually around 400 mil. Yeah, around 400 mil in net income, real after tax net income a quarter. So what's the multiple on this one? A 21. PayPal's around a 12 or a 13. So yeah, 21 forward PE on XYZ. Yeah, they had a one-time adjustment. It says they made 1.9 bill. They didn't actually. They made 250 mil that quarter, which was still a good quarter. Yeah, Jack Dorsey, he's the one who founded the company with Square. How's Square doing? Hey, Square's up 12% year over year. That's kind of like some website design company, kind of like a Wix, Shopify kind of. So I nothing super blowing me away there because I don't like how the growth of Cash App is negative. So we kind of want to see that kind of recover. Can you do Target, please? You know what? Yeah, I got you. Appreciate all the gifts there. Um, Target though is like a dividend play in my opinion. I can see why they've done bad. Like if we compare this to a Walmart or a Costco, like they haven't done as well. I can kind of see why because they don't sell as much like groceries. They sell kind of more discretionary items, like they used to break it down. Let me see if I can find that actually. Yeah, so check this out. Food and beverages, basic groceries are only 22% of the revenue. Then they sell like kind of like more discretionary stuff like household essentials, home decor, furnishing, apparel, accessories, beauty products at Target. So they're cheap though at a 13 forward PE, but here's why they're at a 13 forward PE. If you go to their total revenue, the lifeblood of the company, the sales, it's actually been negative for the past 4 quarters in a row. So they're in a you know, negative growth environment. It's a low margin industry. Like check out their, 2 to, 4% net margin. They just had the lowest net margin they ever had, only this quarter, only a 2.7% net margin. They're kind of being out innovated by Walmart and Amazon. Cause anything you can get on Target, you can pretty much get on Amazon and Amazon delivers it to you. And I don't think Target really has that online presence, where they like delivered you to keep up with that innovation. So, if we go to their bottom line, yeah, that's the rough part. So look at this. The revenue fell 1%, 1.5, but the profits, like the real net income, actually fell 18%. So that really was not some one-time adjustment. The margins really did compress a good chunk there. But here's how we can tell if the dividend's safe, because here's kind of the hype around Target. You get a 4.3% dividend yield. Here's how we can tell if it's safe. So this quarter, they made $690 million. Actually, we'll say they make 800 million a quarter. So they're making 800 million of net income a quarter. The exact cost of the dividend is 518 million. So they really do only have like a 55% payout ratio. So the dividend is safe, but we're kind of watching just the whole fundamentals of the business. Like we kind of want to see growth come back to the top line, and hopefully they just don't get out innovated. So I would keep Target. I wouldn't, I'd keep it as a small position. I wouldn't go crazy. Like Walmart is really growing their online. Dang, look at Walmart stock, all-time high on this one. This app is telling me there's a little, I guess, bullish continuation triangle forming there. I'm down 0.3%, not too much. That's really great compared to a lot of the portfolios, people's performance. Okay. Trade Desk, you know what? Maybe we'll get to Trade Desk. I saw MDA here, but let me know if you're talking about MDA Space. It's a Canadian company, actually. They're on my watch list. Yeah, you got to be talking about this one. You know what? MDA Space signs MOU with Hanwha Systems for Korea's defense satellite constellation. The project could exceed $1 billion in value and involve over 100 satellites to advance their security. So that's maybe one sort of that must have been this day right here. Why did they gap up on this day? I'm guessing it's that new satellite contract they got. So let's see if there's any. So they do satellite systems, robotic and space operations is 25% of the revenue, and geointelligence. So that's interesting there. Are they profitable yet? They're already profitable. So what we see with a lot of these like space companies, like I don't know, I think they're called like Black Sky and like Virgin Galactic's terrible of a stock, but this one, the growth is great here. Year over year, the revenue's up 40% after it grew 38%. So they're on a streak of revenue growth. Like that's great top line growth. So the revenue's up 40 and they're profitable already, easily making like 20 mil of real after-tax net income a quarter. Yeah, pretty good. So this is and they just bought some company here. Apparently they spent $300 million buying something there. So pretty cool here. You bought it at $28. Hey, and it's 38 today. You got in right before the great news. Good stuff there. So we don't or there's no or do we get EPS expectations? Well, anyway, they make around 100 million net income a year, $4.8 billion. So there's no I don't know how to value that one, but that new contract is huge. Pretty cool. Okay. Let's see. Uh let's do Roblox because I saw that one a few times. So, yeah, I got you. Flacito, I got you. So here's Roblox right here. Dang, they are down 12.6%. Um, there was a case. Oh, I don't even know if I can say that without getting the stream potentially in trouble. But actually, let me not say it. But there's a lot of safety issues around Roblox right now. There's someone missing because he met up with someone he met on Roblox. Like a 12-year-old kid is missing right now. It's like big in the news for Roblox. I don't know if that might be why the stock is falling too. Like that was a big story I just happened to come across yesterday. But here is why I can't buy Roblox. It's a net income issue, a stock-based comp issue. If we just go to the bottom line right here, they lose 200 to 250 mil in net income a quarter. And the losses aren't really getting better. It got 7% worse. So here's kind of what you're buying. It's unfortunate, but you're just buying a business that loses a lot of money and they're nowhere near profitability. So it's just a tough one. I don't love businesses that lose a lot of money and they're pretty leveraged. I mean, look at that. The liabilities are nearly the same as their assets. So it's kind of a tough one where, how are they going to pay off this debt when they're losing 200 million plus of net income every quarter? So one impressive metric though, that I wonder if it's propped up on AI bots, but I'm assuming it's true, but the daily active users just quarter over quarter went from 111 million to 151 million. I mean, just an insane 35% quarter, like record daily active users. I don't know what caused that, but that's pretty insane if that's true. So yeah, there you go. There's Roblox. Sadly, the thing that scares me is just these net income losses. Like, yeah, the revenue growth is good, but it's an issue with the bottom line. All right. What do you think of SEHG? SEHG, what's that one? This is the large cap ETF. Yeah, great ETF. It's basically the S&P 500, but it should perform almost identical to the S&P 500. Same kind of market cap weighting of the top companies. Nvidia, Apple, Microsoft, Amazon, Google, Meta. So yeah, you definitely can't go wrong buying this. On average, it should just give you 7 to 10% of your money back every year, just like the S&P 500. Wonder what's the expense ratio? Only a 0.04% expense ratio, so basically no fees. Pretty cool. Innodata and APH. This is a really, let me go over Innodata. They just got a huge contract with Palantir. And I'm convinced the stock would be up like 50% if it weren't for just the market, the software, like just decline around Innodata. So they partner with Palantir for AI. Like Palantir is actually partnering with them. Like Palantir's given Innodata money, and Innodata also just got a huge Golden Dome contract for that huge, military budget thing. They got a good contract with the actual military. That literally just happened right around on that day right there. So this company's already profitable. This is the crazy part. They had a one-time adjustment. The net income wasn't down 52%. You see where it says they made 17 mil. They didn't actually make 17 mil. They only made like 11 mil. It was a record Q3 quarter. The before-tax number was 11 mil. The after-tax is 8 million. So this company really is already profitable, making like 9 million of net income a quarter. It's really impressive. And they have no net debt. They've fortified their balance sheet. The liability ratio went from 46. It's now at 36. So they've very much so fortified the balance sheet. And check out the expectations. They beat every quarter. This quarter, analysts expected 59. They did 62. And in 2 quarters, it's supposed to be 72 million. I think with this new Palantir news and the Golden Dome contract, this one could potentially explode higher. And like they beat on everything. It's not just some one-time adjustment. Like the EPS was a 13 cents, they did 24. The EBIT expected 6 mil, they did 11 mil. So they're beating on every expectation. But bad news is they're expensive. We go to them on a forward PE. They're at a 50 forward PE. I still think that It's not an insanely good dip to buy yet, but it's certainly one that's like the forward PE is probably actually like 2 years out, like it's like a 28 or something. Like it I really like Innodata in the position. Like it's a profitable company, a small cap. They're only worth $1.7 billion dollars. But their top customer, I forgot to mention, is the Mag 5, I should say. Their top customer is Google, Meta, then I think it's Nvidia, Amazon, and Microsoft. So it's pretty cool. Yeah, they're digital data solutions. That's the real growth driver here. So anyway, Innodata is what I own them. I'm totally biased, so beware of that. I own them in my Roth IRA. We're up a good chunk on them, so that's why I'm not really allocating any new money to them. And it's also another one where you don't want as a really big size position, but you still want it as a position because you know the fundamentals look really good there. You don't really see many small caps that's sort of like with that many like great customers and balance sheet and net income. So I'm up 68% on them, but I barely put any money in them. Let's see, is the market kind of recovering? Oh yeah, look at that. The SPY is kind of trying to recover here. Only down 0.35% on the day. But yeah, a lot of my holdings are getting cooked today. We're down 0.86% and our Webull portfolio is down 1.67. AMD is kind of leading the losses there. Is anything green really? Disney's green, AbbVie. Yo, AbbVie, I almost want to go over them. If you're looking for a higher yielding play, this one is a 3.2% dividend yield. So no matter what, you're getting 3% of your money back just in a dividend. I think on top of that, you're going to get 3 to 4% in stock price appreciation every year. So on a total return basis, you should get, even buying AbbVie now, around 7% of your money back, potentially just for the rest of time with the sort of growth they have. Okay. Rocket Lab or Unity? I'd go with Rocket Lab, but Rocket Lab's so expensive. Where it's just like so tough to buy any Rocket Lab. Hey, best self. Good to see you, homie. I've been great. How about you? How did you learn to invest in stocks? Well, hey, it's kind of a long answer. It's just like books, articles, just research, classes. I'm definitely not an expert. I'm in college right now. I just actually got back home from college like 2 hours ago. So I'm definitely not an expert. Don't listen to me. But yeah, I just kind of do my own kind of. I just know what the financial metrics are, and then I just look at the important ones that I think are important. That's the ones that are important because I historically see them move the stock price up and down a bunch. Oh yeah, Wealthfront, Josh. Let me do that one for you. This is another kind. It's like a pure Canadian kind of brokerage here. I love the brokerage industry. It's like the picks and shovels play of fintech. Whenever you go buy a stock, option contract, crypto, whatever, they make a juice of a commission, and they're only worth $1 billion, a 1.3 bill market cap. It says there is no forward PE. Really? What's the expo? So I guess maybe that'll be a one-time adjustment. They're supposed to lose $1 of EPS. Wonder if that's like an IPO fee. Because yeah, if we go to their net income, it's got to be because if we go scroll out, they're always making like 30. Again, they just IPO'd, so we don't get that much data, which is unfortunate because they just IPO'd. But they're usually making 30 mil in net income a quarter, and if doing 30 mil in net income a quarter, that means the current valuation is a 10 PE. I don't know why the forward PE is a negative. I guess the expectations are they're supposed to lose net income, but I don't know if that's just like a one time, like usually that IPO fee is what they say. So yeah, as long as a company's making 30 million net income, I mean, it looks great. The sales are up 16% year over year. They have great margins. See, the brokerages always have crazy good margins. Gross margins of 90% and the net margins of 33. Robinhood is like a 40% net margin. Moomoo, the brokerage I'm on, is like a 45% net margin. So yeah. What are you using to screen record? I'm on my computer. It's an Apple TV. I just screencast my phone to my computer, and then I just screen record or I TikTok live studio thing. Ooh, Grab. CC, let me do Grab real quick because Grab, this is what I call international Uber. They do exactly what Uber does, but in all these other countries. This was kind of cool about them. Malaysia's 30%, Indonesia's 22%, Singapore, Philippines, Thailand. So notice the US and Canada aren't on here. It's like we know it's universally needed, the commodity of ride sharing and delivery. So this one is just in these international companies. So it's a way to get international exposure. And it was also a genius way for Uber to get international exposure. The actual largest shareholder of Grab is Uber. They own 13% of all the shares here. And Toyota Motor owns 5.5% of all the shares. And they're profitable. They're making net income every quarter. They just got net income positive. So you really don't look at a forward PE. And the revenue growth is going to be insane too. So I love this stock. It's like it was genius of Uber, basically international Uber. We know the commodities needed, and everyone always goes with Grab because you don't really trust like just local people's pricing. They always change their price and stuff, but Grab is like anyway. I learned um through PHOC around and found out approach books, YouTube, expos. Yeah, there's a lot of great ways to learn. I mean, YouTube is great. Yeah, hey, I'm streaming on YouTube and TikTok right now. If you wanted the follow button, I appreciate that. TikTok keeps removing my sadly For You page eligibility because I keep mentioning it. But yeah, if you want, there's only one way to support me. I sell nothing. I have a YouTube channel I'm trying to build. It's called Nathan Robert. It's also in the link tree in my bio. But you can just type in YouTube Nathan Robert. I'm streaming on there too. You can like rewind it too, which is kind of cool. Oh, hey, we were just looking at TMC. Real quick for TMC because we just looked at them kind of a couple minutes ago. I would avoid this one or keep it as a super, super small position simply because they're a startup. They have no revenue at all. They're not expected to make any revenue anytime soon. But I've owned this company. Actually, I used to be a shareholder. Sold out of it. That was year 2022, like years ago. But they make these underwater robots that go on to the very bottom of the ocean and then suck the nickel and the copper and the zinc out of the water, and then they can sell these precious metals. But they're like, it's such a startup where they're like, it's just like you can't trust them, and so they have no revenue. And look at these net income losses. This is the other kind of scary thing. Just this quarter, just the net income, they lost 280 million. And look at that did to their balance sheet. They now have more liabilities than they have assets. Because when you lose 280 million, that money has to come from somewhere. So kind of, now they have 216 million in liabilities and the assets are lower. So they're in a tough spot where they're having to issue shares to pay for their net income losses. I don't know. I'd be so careful with TMC because no revenue, lose a lot of money, not a good balance sheet. From a pure financials point of view, that's why I'd avoid that one, sadly. How much longer are you going to hold race for? Hey, what up, Zero? I don't really have any plans to sell Ferrari unless I see a great opportunity elsewhere. And I'm not seeing any phenomenal opportunities yet. But yeah, race is my newest position in here. It's Ferrari stock. I think they're pretty quality. They're at a new 52-week low today. I did buy. Look at that. I forgot. I bought a little fractional share. I'm never opposed to buying fractional shares. I bought 0.1 shares of Ferrari because I had a little cash left over this morning. So yeah, they're still not super cheap. That's the thing. Even at this 52-week low, they're not cheap at a 30 forward PE. But here's what I like about Ferrari. This is why Ferrari is a beast of a company. Like this EPS growth is so impressive. I mean, let me check out like the EPS is net income. So the net income growth has been phenomenal. They're making 400 to 500 mil in net income a quarter. You get a 1% yield here. 1% of your money back just in a dividend. They are a European company, so we've converted their currency to US dollars to kind of get a better picture here. So yeah, this really is, they're making 400 or 500 mil in net income a quarter. It's impressive. And no net debt either on Ferrari. So, but there is long-term growth headwinds here. Why did they fall back here? Well, they only projected around 5% annual sales growth through 2030 compounded. I think that sets them up for a good beat, but the company themselves said we're only going to have 5% revenue growth through 2030. And that is not good for a company with a high valuation, a 30 forward PE. Before today, it was like a 40 forward PE where I initially started buying, but they've always been so quality to me. Like I've always felt like if tariffs really get worse or something like Ferrari, if their input costs go up, they have the kind of consumers or the customers where they can raise the prices and they don't really care. Anyway, Ferrari's kind of cool. They have a backlog of orders through like 2026 or I'm in 2027 of like cars. They're in the newest model or whatever. So kind of cool. They do those races too, where they get like 15% of the revenue. So they sell cars. You'll never see a car business. Tesla's lucky to have like a 5% net margin. This company has net margins of, 20%, over 20% net margins. Around 15% of their revenue comes from sponsorship revenue, where people pay Ferrari a lot of money to come to their races and events and put up their booths for these sponsorship events. So that's another way they make a lot of money, which is kind of cool. All right. But again, in this environment, you really don't want to make Ferrari a big size position. That long-term growth expectation, the 30 forward PE isn't a steal. So I'd still be careful with them. But I've been slowly buying more just because, guess we'll just see what happens. Mr. Nahor says PSTG. So this is pure storage. This is, one of those like like, yeah, literal storage plays. They're, I think, a subscription model company. Yeah, check this out. 44% of the revenue is their subscription model, and that's good growth. It's up 14% after 22, after 24, after 35. So I like subscription model revenue. It's all recurring. Here's kind of the annual trend of that. It looks fantastic. What about their other business? They're also in product revenue. That's up 17% year over year. So that's good. They beat on revenue. They missed on EPS slightly. Maybe it was a one-time adjustment. So yeah, the profits do look a little. So there's a margin issue here. Net margins are falling. Like, look at the profits year over year. -10, -80, -20, -40, -20. So the sales are all growing. Revenue's up double digits every quarter, but the profits are all down double digits every quarter. So something's happening with their margins. Maybe that's why the stock is kind of not done great. What's the forward PE though? An 87 forward PE. That's not cheap. That's because they're struggling to make consistent net income. Huh. But I like I mean, I like the top line growth here. I have to do more research on this one because I don't know if it's a screaming buy yet at this 87 PE with the margin issues. But that subscription model growth was impressive. Oh yeah, let's do Rocket Lab real quick. I did not get to Rocket Lab, my bad there. Does Redwire seem like a good buy? Oh, a new defense contract. Hey, we'll look at Redwire too. Remind me to get to that one. My bad if I'm missing some of these stocks here. I'm trying to get to all of them. I'm reading like both chats here. So Rocket Lab, I love this space company. If I had to buy any space company, it'd be this one, but they're so expensive, like more expensive than like a Palantir. So Rocket Lab completes 81st Electron mission, deploys Kaya satellite. Rocket Lab advances neutron rocket development. So completes 80th mission. Okay, let's go look at their actual numbers because they have great growth. Their main business, their space systems revenue right here is growing great. It's over 100 million in revenue for the first time ever. It was 114 mil of revenue. All the quarters before, it's never been close to 100 mil before. So it was a record quarter here. And their launch services grew 95% year over year. So both businesses are growing nicely. Like, as long as they keep up this top line growth, I think Rocket Lab will probably just continue to do well. Like, I can't believe it. The revenue's up 48%, partially from an acquisition. They just bought Geost. So that's why their balance sheet their assets went up. That really did help out their leverage ratio. That's good. But yeah, revenue's up 50% year over year. They're still losing a lot of money. They're still losing 50, 60 mil a quarter, but analysts are really just watching this top line. If they can keep growing that tremendously, keep on doing these missions and stuff, they get it. They have like big contracts from NASA and JAXA. So let me check out Redwire for you. And then we'll look at CRSP, some of these other names. REDW. So Redwire, this is, let me see if there's any news right here. Redwire secures role in a $151 billion SHIELD defense contract. Redwire bids for Golden Dome missile defense systems. So they're trying to get that contract, or maybe they did get it. I don't know. Let's see what the current revenue is. So they had a great quarter, 100 mil of revenue. Was that from an acquisition though? Okay, so yeah, they just bought a company last quarter, and that's why that's why their assets went up so crazy in that one quarter, because they just bought a company. So after buying that company, that sent the revenue to 100 million, which was a record. Yeah, if we can, let me zoom out more here. Record 100 mil of revenue because of the acquisition. Oops, I keep accidentally switching tabs. But yeah, the net income, they're still losing a bit of net income a quarter, 40 mil, 50 mil a quarter. So, well, we want to see how the Golden Dome contract plays out, and how the acquisition rolls out, because the analysts were bullish, but they missed on expectations. I expected 133 mil of revenue. They only did 103 million of revenue. So maybe that's why they gapped down on earnings day right here. I don't know. But anyway, maybe they can get this new contract. I don't know. Interesting one there. I don't know. I'd keep the allocation minimal on that one. What would be a great stock to DCA into now? It's going to sound boring, but I really am so happy with this company and their earnings. Microsoft. It sounds boring but I think if you buy Microsoft now, not financial advice, you should just get on average like 8% returns easy for the rest of your life, like every year on average. Like Microsoft, or just whatever the S&P 500 does, like they're so quality. maybe I did a deep dive of them in the very beginning of the stream. Let me know if I should go over them again if you want. But yeah, Microsoft's a phenomenal one. APH. Oh wait, let me get to CRSP. I think that's CRISPR Therapeutics. So we can get to Amphenol. So CRISPR Therapeutics. This is one of the gene editing, gene splitting kind of startups. So unfortunately, the stock is the same price that it was in 2018. So, oh my goodness. All right, hold on here. I gotta fill out a CAPTCHA. Uh-oh, that's not good. Okay. Well, okay, if it lagged for a second or went out for a second and we're back, they made me fill out a CAPTCHA because they think I'm AFK. But okay, CRISPR Therapeutics. Yeah, gene editing, gene splitting company, and I just don't think they have any revenue. Yeah, so look at this. They only have 800K of revenue. If you're wondering why do they have 35 mil of revenue that one quarter, well, they actually sold off their own asset. Like they actively sold out of their own assets. We can see on the cash from investing activities that 35 mil of revenue wasn't from them like selling something. It was a one-time adjustment. And even in worse news, on top of them only doing 800K of revenue a quarter, they lose 100, 200 million in net income a quarter. It really makes them a tough buy, in my opinion, because like no revenue, losing a lot of net income. At least they have a good balance sheet to afford it, but they've just been using um, the stock to issue shares. Hey, ARK, Kathy Wood's company owns 10% of all the shares, but yeah, they just diluted you by $300 million. Oh, so that's how their assets kind of jumped up like that. So yeah, they needed to do that because they're losing 100 mil, 200 mil past two quarters. So yeah, their cash pile is at 1.9 billion. So they actually do have a lot of cash to kind of burn through, a couple years more cash to burn through if they do keep losing net income at the rate they are today. But we really want to see them start to make some actual sales. So they're expecting revenue and not the analysts aren't, 3 mil, 2 mil, and they've been consistently missing on that. So I don't know. I'd be super careful. I can see why the stock has been flat for, since 2018. Let's do Amphenol stock. I do own this one in my portfolio here. They reported earnings. They were good. So let me actually go to them right here. Do they have Q4's number? Yeah, they do. So here's Q4's numbers. The revenue grew 49% year over year. So revenue's up 49 and the net income is up by 60%. Like if I just zoom out on the net income right here, I mean, like they deserve a medal. This is some impressive bottom line growth. Not just top line, but bottom line. And not just net income, but also free cash flow. That's what FCF stands for. Let me pull up the free cash flow right here if it'll load for us. Please. Well, okay, oh well. If it doesn't work, then okay, there we go. Yeah, the free cash flow is 1.5 billion. Record free cash flow quarter. So they have so much just free cash to buy companies with, and that's what they're doing. They just acquired CommScope. Let me see if they still have the news down here. Oh yeah, so Amphenol forecasts this CommScope business to generate 4.1 billion of sales, and it's accretive 15 cents to their EPS. And I think it's going to be even more accretive than 15 cents a quarter. By the way, I've seen CommScope doing. So anyway, they are expensive. Well, let me see. Yeah, 31 forward PE. That's the cheap. Actually, that's not crazy. A 31 forward PE. Imagine Amphenol at like a 28 or a 29 forward PE. And I've been buying this one, in raising my cost base. I don't mind. They're so quality. I was buying this one down here at 129, 135. So I am trying to buy more shares of Amphenol. I'm trying to build up my quantity of shares. So yeah, they're not super expensive. 31 forward PE. They were expensive up here. Like the day before earnings, they hit a crazy all-time high, and then they fell, which just kind of only really offset half of the gains they had from the previous day. So it makes the candlesticks look crazy here. But yeah, I'm super happy with their earnings. Yeah, why are they down? They were just really expensive. They gave great guidance for next quarter as well. So that's my guess. How did GLW do? I know Corning also reported numbers. Yeah, they're down a little off their peak as well. They hit 1,000 or 114. Now they're at 104. So I'm definitely not worried about Amphenol, and I'm certainly wouldn't be selling out of that one. How much lower do you think SoFi will go? Hey, yeah, SoFi. They're down 7.2%. They had great earnings, and the valuation's starting to get very cheap. Well, not very cheap, but a 36 forward PE. For SoFi and the growth that they have, I think that's very fair. Look at the EPS. They beat on EPS every quarter. They beat on revenue every quarter. Like that's why people are starting to take SoFi serious. They make like over 100 million net income a quarter. The top line grows crazy, so they beat on every expectation. The metric you really watch if you're a SoFi shareholder, the growth has been in their financial services. Check this out. It's up 76% after grew 101 after 222. Like no analyst expected this sort of growth. It really was impressive, and it continued this quarter. So they've just been so expensive where it's worth probably nibbling a little bit on SoFi, but not go crazy. I am a shareholder of SoFi. They're one of my biggest regrets. I regret every share I've ever sold to SoFi. I might be able to buy more, but even on the dip, I'm still up 278% on my barely leftover shares. But I'm not allocating any new money into SoFi yet. Hey, silver, what happened? Do you think it'll grow now? I'm just kind of avoiding the precious metals. Yeah, I don't know what happened. I think it might have been the news around the new Fed chair, Warsh or whatever his name is. I don't remember, but yeah, silver's down 26%. Not great. What do you think of ServiceNow? Yeah, let me do ServiceNow. This is one of the pure software names. Pure software name right here at a new 52-week low today, sending Salesforce down. I haven't looked at their earnings. Let me see what they were. So here they are. They beat on revenue. They missed on net income though. They expected 44 cents of EPS. They only did 38. Maybe that's why they fell. Maybe it was a one-time adjustment. But yeah, they still print money. They easily make 4 to 500 million of real after-tax net income a quarter. And the EPS is supposed to, dang, the free cash flow was really good this quarter. 2 billion of free cash flow. I think they're doing acquisitions. They announced I think they're buying CyberArk. Guides for slower subscription growth. Okay, so that's not great. It might have been the guidance that hurt the stock because literally used to break it down like 99% of the revenue. Yeah, 96% of this company's revenue is their subscription revenue. So any slowdown to the subscription revenue is not great. Projects subscription revenue growth of 19 to 20%, reflecting a slight slowdown. That's still really good, 20% growth. But yeah, the forward PE is still a 50, but they're still having this year's 30% EPS growth. Because if you look at the current PE, it's a 70. So it's going from a 70 to a 50. Then the year after, it'll probably go like a 30. So just because of how fast they grow. So anyway, ServiceNow is another one where you don't want to go crazy yet on it. And Roblox, Unity, AppLovin, they all tanked. Yeah, AppLovin's down 15. That's the one I'm really watching. AppLovin's so impressive. Yeah, Unity's down 23%. Where was Roblox? Yeah, Roblox is down 13. A lot of software names are down bad. Gold, precious metal names. Yeah, it's Take-Two's, which is GTA 5, GTA 6. They're down 8%. Shopify's down 8. SoFi's down 8. So yeah, rough day for a lot of sectors. We're down 1.8% in here. What are we down in here? We're down 1.45. Okay. mRNA said the Vigilante. Let's check it out. mRNA. So this is that COVID vaccine company, and they finally transitioned the company. So, here was obviously COVID. They had crazy vaccine sales. So here's kind of the bad news. 95% of the revenue is their vaccine, their COVID vaccine revenue. And as we know, look at these declines. That is not what you want to see. They used to make crazy revenue back here, but now look at these year-over-year declines kind of on the bottom there. Down 45 after it fell 30, after it fell another 30. So, but the sentiment, if we notice, there's a little bit of, there's a little bit of hype around them recently. They're having this collaboration for other products that are outside of the vaccine. So yeah, with Moderna and Merck report 5-year data showing mRNA vaccine reduced melanoma by 49%. So that's good results. Partners with Recordati to commercialize another therapy product. So anywho, they're trying to get away from the vaccine sales, which makes sense. So yeah, bad news is they also lose a lot of money. Check this out. So it's not like some super profitable business. Like they actually lose quite a bit of money. 200 mil just this quarter, then 800 mil, 900 mil, $1 billion. So we definitely want to see them narrow their losses and kind of bring the growth back to the sales. Because I can totally see why this stock is down so much from its $300-400 peak all the way down to 40, because the numbers explain it. The actual sales and profits fell that much. It's unfortunate, but it's what kind of makes sense. Six Star said, Michael Anthony, what's up? He said PAGS has an upgrade to $13. What is this company? They're worth $3.3 billion, and there's some software name. Oh, they're a Brazilian company. So let's convert the currency to USD to US dollars just to get a bit of a better picture here. But that's a cheap valuation on the right. They're at a 7 forward PE, so they trade at 7 times net income. So they did miss on expectations this quarter slightly. They expected 985. They did 959. Not that big of a deal. They beat on EPS though. So yeah, they're already profitable. They really are making 90 or 100 million of real after-tax net income a quarter, which is really impressive. Pre-recorded, hey, what's up, Brad? Yeah, hey. We stream every day if y'all wanted to follow up. I'm sorry if I'm kind of reading the YouTube chat, and TikTok has already removed my stream from the For You page eligibility, so I'm kind of just freeballing it now. But I appreciate everyone that's still here, especially on the YouTube stream. Y'all are the best. So yeah, 7 forward PE on PAGS. So yeah, net income of 100 mil. So like all that bad news and then missing on expectations, but they still make 100 million of net income a quarter. So yeah, that really is a cheap valuation, but they're a Brazilian company. AVAV and Duolingo. Or should we do deal or TE? Is that TE connectivity? Or T1 Energy. Wait, T1 Energy. I think this is like an alternative energy source kind of company. I forget what they do. Or no. Okay, well, let's see. Manufacture and sale of photovoltaic solar modules. So maybe it's like a solar, like clean energy play. Let me go to their website. Developing battery solutions. Yeah. Let's check this out right here. Advanced American Solar and Battery Manufacturing. I wonder who they manufacture. Maybe some like Enphase, their first solar products. Who knows? But anywho, let's go look at their actual numbers because that's what matters. So revenue is, they basically just got their first ever set of sort of revenue. The revenue year over year went from 2 million to 200 million this quarter. Whoa. And next quarter, they're expecting 368 mil of revenue. So that's a nice little bump up to the revenue there, basically from a startup. They did miss bad on it. They expected to lose 15 cents of net income. They lost 87 cents. Basically, that's the same as they expected 22 mil. They lost 95 mil. So that's not great. They had a miss on their net income, but the top line growth is phenomenal there. Trina Solar Co., largest shareholder. I don't know, some sort. I don't know if I buy it here at all-time highs, but that top line growth does look interesting. You get LGN. Yeah, let me check out LGN for you. Allegiance. I have this one on my watch list. They're like an HVAC play. Like an MEP, mechanical electrical play, if I remember correctly. So they're worth $5 billion. And yeah, installation and maintenance. I kind of like that. The maintenance is kind of recurring revenue here on these mechanical work and HVAC systems. So the revenue's up 35%. That's a record, 495 mil. Record sales there. Then the engineering and consulting revenue, that also hit a record this quarter. Again, they just IPO'd like literally September, so we don't have too much data, but let's see. Revenue's up 26 and they're not, they are profitable. So the net income looks a little more choppy. I don't know. They're having some weird one-time adjustments, but they really are making like 10 plus mil net income a quarter. Looks like Blackstone's the largest shareholder. They own 41% of all the shares here. So interesting there. Maybe we can check out their website really quickly. Allegiance. Okay. Designed more than 10 million square feet of net zero buildings. So yeah, they built the whole like electrical, mechanical infrastructure of the building, I think. Kind of like a Comfort Systems does, which they were down like 9%. Comfort Systems is down a bit too. Yeah, 2.25. Do you go live every day? I do try to, yeah. Sometimes I miss some days, but yeah, generally I do try and stream every single day, sometimes twice a day. Like on Sundays, I do 2-3 hour streams on Sundays. Congrats on 10K subs. Hey, thanks for that, George. I appreciate you. Will be a good entry for AppLove. And to be honest with you, I think it's worth maybe the slightest bit nibble at current valuations. Like they have a cheaper valuation than SoFi does. So, and potentially like more impressive growth, like the EPS projections, like revenues up 69, the net income's up 92. I mean, this sort of bottom line growth deserves so much hype. I can't believe it. So, uh, and it's only going to get better. The EPS is supposed to go to $3.15. The EPS has never even been close to $3.15 before. So it's just like crazy growth expected on AppLovin. So they're at like a 36 forward PE right now. Oh yeah, I meant to get to Dave. Yeah, we did Dave earlier. That was one of the I made it here's kind of the watch list of stocks I really think are attractive to buy. Wait, where is it? Yeah, right here. AppLovin, Webull, Microsoft, Dave. That was kind of the list there. SoFi was an honorable mention, but they're still not the best buy, even on this dip. So neither is AppLovin, because there's still a 37 forward PE, but AppLovin is a great company. Same with Dave. Dave's at a new 52-week low today, and they are cheap as a dog. So, where's the valuation here? Forward PE is a 13 on the right there, a 13 forward PE. And I think this company, with the growth they have, deserves way higher than a 13 forward PE. Here's the revenue growth. Phenomenal. It's a record this quarter. It's up, what's it, 63% year over year. So the revenue's up 63 and the profits are up 1,600. Well, here's the net income. That's the crazy part about David. This growth rate, the profits going from 2 million to 45 million year over year. What's it going to be, the same time next year, next quarter? So the current price of net income is, what was it, a 16? Yeah, on the left, they're trading at 16 times PE. The net income is supposed to grow another crazy, like 25, 30%. So that's what I love about Dave. They're fortifying their balance sheet. Every metric just looks great there. I'm a shareholder there, so I'm definitely maybe a little biased. Microsoft or UNH more attractive? I honestly think Microsoft is more attractive than UNH. UNH really did have some bad numbers. It was unfortunate. So at this moment, what am I buying? I bought the slide today. I bought the slightest bit of Webull, and I bought like $100 worth of Progressive stock today. PGR Progressive. So yeah, it's an insurance company. If you heard of them before, I mean, this is another one where like the numbers are just so great. Like here's just basic net income. Well, I almost spent too much time. Like the net income growth is nuts. It's up 25%. They're making 2.5 to 3 billion net income a quarter, trading at 11 times PE. I think that one's pretty fair. Oh, hey, what up, Plasma? Good to see you, man. Yeah, let's do Microsoft real quick. Let's analyze Microsoft too, because this one, if you buy Microsoft now, not financial advice, you should just get S&P 500 returns. So basically 8% of your money back every year for the rest of the time, potentially with Microsoft, not financial advice. Super cheap valuation, a 24 forward PE. I mean, like that's what Meta was trading. Like that's so fair. That's so cheap for Microsoft. Like this should be a 28. So a 24 forward PE on Microsoft. They print net income. Like they had a one-time adjustment. They didn't actually make 38 billion in net income, but they really did make 30 billion in net income. They had a $7 billion one-time adjustment from like OpenAI valuation realization or something like that. But anywho, it was still a record-breaking quarter. Here's the actual like operating profit that excludes that adjustment. Like this is a beast of a company. Every metric's growing. They're nearly taking over AWS as the number one market share. They're getting really close. They have 100. Their cloud business. They're a big cloud play. Their Azure cloud does over 120 billion of annual revenue for Microsoft. And also, they're a huge software business. Office, OneDrive, all that. It was up 15% year over year, and it also does over 120 billion of annual revenue for Microsoft. It's insane. So you just can't bet against Microsoft. Better credit rating than the U.S. government. So it's an AI play, a software play, and a lot of software names have been getting crushed. So, uh, let's see here. Microsoft unveils Maya 200 AI chip to reduce NVIDIA dependence and enhance Azure's performance. That's kind of interesting. Microsoft, NVIDIA, and Amazon discuss 60 billion investment in OpenAI. Microsoft backed OpenAI launches enterprise AI software. So anywho, that's kind of cool that they're making their own chip or TPU there. Kind of like Google does. Google trained their whole Google Gemini on their own chip, on their own TPU. All right. Do you think Adobe's a good value? Let's check out Adobe too. PayPal. So PayPal, unfortunately, I don't love this one. Like they just do a commodity. You send money from one person to another, like on Venmo, and same with PayPal. It's kind of just a way for you to either like buy a product or just send people money. And this industry is kind of being out innovated. I don't know. That's why they're at this like commodity multiple at this 10 PE. They're not really expected to create or lose you any value, which is weird. I do like what they're doing with their net income right now. I think they just bought a company. Let me see if I can find that news. Yeah, PayPal to acquire Israeli AI commerce platform Symbio to enhance agentic commerce ecosystem. Well, wonder how much they spent on that. I wonder if they disclosed that. Yeah, financial terms not disclosed. But I want them to do some more meaningful acquisitions to try and out innovate out of this hole that they're in. So here's their bottom line. They're making 1.25 billion of after-tax net income a quarter. What's PayPal doing with 1.25 billion in net income a quarter? Well, my favorite thing is they're doing share buybacks at the top right now. They're buying back $1.5 billion of their stock every quarter. So that means the EPS is booming. So the net income grew by 23, but the net income per share grew by 31 because they bought back so much of their own stock. It just makes the EPS go up even more than the net income growth rate. So I'd keep the allocation level low. I know they have like a 1% dividend now. They just started paying a dividend, so you get a 1% dividend with PayPal now. So that's kind of cool. So forecasted EPS growth is 7 to 12%, driven by agentic commerce, Symbio acquisition, Venmo monetization acceleration. Yeah, they need to monetize Venmo. Very cool. Yeah, they own the Honey kind of Chrome extension. Anyone's heard of that before? Let me go to should we do Adobe or IONQ? Let me do Adobe. So this is another one kind of being hurt by the AI thesis. This is, Photoshop, After Effects. They're saying in 10 years from now, will we need to use Photoshop as much if the technology, the AI is so good where it can just AI generate you a logo, AI generate you a thumbnail or whatever, or certainly, remove a lot of demand for Adobe products, not fully destroy it. But I'm kind of a believer that humans will always need like that final touch on art. But they're not. It's just the thesis that's hurting Adobe and collapsing their multiple because they're beating on every metric. They beat on revenue, they beat on EPS, and they beat on EBIT. They beat on all three metrics every quarter for the past 3 quarters in a row on everything. So it's not like they're missing their expectations. It's just the thesis around them collapsing the multiple. So yeah, Adobe's at a 16 forward PE because of those long-term growth expectations. But here's the thing, like Adobe prints money. They easily make, 1.8 billion in net income a quarter. They had a one-time adjustment that one quarter down here. That was the Figma fee. They had to pay Figma $1 billion after they weren't able to acquire Figma. But anywho, they make 1.8 billion in net income a quarter. Adobe's doing the same thing that PayPal is. They're taking advantage of the low stock price and they're spending at the top here like $2 to $3 billion a quarter solely buying back their own stock. So that's what I do like about Adobe, but we're really wanting to be careful with that long-term thesis here, and that is going to be daunting on the stock. So that's why I keep saying this a lot, but I wouldn't have Adobe as a crazy big size position, and I'd maybe nibble on it, but no, I just wouldn't want it as like a huge size position. But the risk reward is starting to look very good because they're printing net income, printing free cash flow, doing buybacks. I couldn't really see them falling to like the forward PE is a 16. Like I could not see that at a 13 or a 12. That would be super weird for Adobe. So I think we're pretty close to the bottom, or the bottom is probably like, it could go another 10, 15% at most, I think. So the risk reward's starting to look decent. Here's another software name, OPRA. Has anyone heard of this browser before? It's called the Opera GX browser. It's kind of like an alternative to like a Google Chrome. It's kind of like a Firefox or something, but it's like their own like browser. That's all this company is. A low valuation, a 12 forward PE. So they really do trade at 12 times forward net income. And they have no debt too, which just adds, a lot of safety to the table. A big safety net. They have no debt at all and like over 100 million in net cash, or 100 million cash. And not just 100 million cash, but they're also making an extra 15 to 20 million of additional net income a quarter that just they can retain because they don't have any debts to pay. So anytime they make net income, they can just retain this. So yeah, that's good. Revenue's up 23, after grew 20, after grew 20. So they're on a nice streak of top line growth. So I want to see, I think they're doing buybacks. So here's a quick way to check. Net income's up 3.7. The net income per share is up by 5. So they've bought back 1.5% of the shares. Whoa, is that true? Was this like a special dividend? Do they really have a 6% dividend yield? So they are paying 40 cents out a quarter. Do they make that in EPS? No. Wait, was that every quarter? Oh, so this is okay. So this is off math. This is every half a year. So they do that's a high payout ratio. Yeah. I don't know why their dividend payout ratio is so high. Well, actually, let's go see how much it costs. So they make 18 mil in net income a quarter. Let's see. Cost of the dividend, and it's going to be choppy because it's like every other quarter, if I can even find it. Cash pay dividend. So it cost them $35 million every other quarter. So every 6 months, they pay 35 mil. Yeah, and for the past 2 quarters, they made only 32 mil. So I don't love that dividend payout ratio, actually. That is interesting. I don't like that. I don't like that dividend payout ratio, actually. Ooh, Meta stock. We haven't looked at Meta all day. I haven't even really looked at their earnings report. Like, Microsoft tanked, but Meta went up a bunch because, their core business, their ad generating business is improving like crazy. So let's see. Let's see if we can find any hub analysis here. Is they going to break it down for me? Advertising revenue grew significantly, with an 18% increase in ad impressions and a 6% rise in average ad price. That's insane. User base expanded 7% year over year, reaching 3.58 billion daily active people. With Threads, WhatsApp, Messenger, Facebook, Instagram, all that. So let me show you, obviously the active users is just crazy, 3.54 billion. Let me see what they reported. So yeah, they beat on revenue, they beat on EPS and on EBIT. So here's kind of the last quarter. They had a one-time adjustment. It says they only made 2.7 bill. They actually made like 18 billion, but they made 22 billion of net income this quarter. Record net income quarter. It's never been higher than that before. Not just record net income, but also I believe record, look at that. The cash from operations, 36 billion, but they're spending a lot. Ooh, they're spending a lot on AI. They spent $35 billion of it. So basically all their money on AI chips, on companies like Scale AI and, I forget the name of that other company that they just bought. It's like Manus, something like that. Anyway, that's one thing being questioned is how much they're spending on AI, but it's working. Like the profits, like just basic operating profits are here. It just is so good. It's so good. And the forward PE is still not even crazy expensive. It's a 23. Meta is still at a 23 forward PE. So, I mean, it could go higher easily. I'm a shareholder of Meta, and I would certainly not be selling or trimming shares. Like, don't sell out of Meta for a profit. Like, they're going higher in the long run. I love what they're doubling, they're tripling, I think, their production of their Meta Ray-Ban glasses. So, market's going worst by the minute. Really? Let me see real quick. Yeah, dang, look at that. The QQQ is at a new intraday low right as we speak. RIP, don't check your portfolio. Yikes, but these are the kind of dips where we got to take advantage of it. AppLove and I really got this one on the top of my watch list. They're so quality. Palantir's down 5. Coca-Cola Consolidated's up slightly. Is McDonald's up too? No, even McDonald's isn't spared. They're down 0.22%. Usually they do good. Is our HCA up at least? HCA up. Okay, so our hospital stock is up. I kind of like having some of these like healthcare names to kind of that weathers out your performance. Like AbbVie's green on the day. Calmain. How are we on Calmain? Yeah, we're up on our Calmain now. We're up 2.5%. We were down on them as they went down to like $71, but they're now back to 83. Why is everything going down? I think it's just all of software. I don't really have a specific reason. Is normalization back to normal valuations. We had a new Fed chair, like Warsh, I think's his name, that just like came out of nowhere last night. Silver's crashing too. Precious metals. I think it's from the Fed chair move. Silver's down 28% on the day, and yeah, it's just hurting stocks. The only stock that that sounds really safe to me is McDonald's. Like I just have a weird feeling like I just want to buy more McDonald's because no matter what, this is just such a safe investment. If you're looking for a great quality stock that just doesn't go down, like even where's 2008? I should find 2008 right here. Is this 2008? No. Here's the 2008 crash. Like it basically, it didn't happen for them because McDonald's does good in a recession. Historically, the sales go up for McDonald's in a recession, and it's really because they're really a real estate royalty company. If you go spend $100 at any McDonald's or just you go spend any amount of money, they keep 4% of that total transaction as a royalty. They call it a sales and marketing royalty. So they collect super high margin royalties and they own the land under 80% of all the stores. So they're collecting rent from every franchise every quarter. So that's why if we go to the net margin, save a 32% net margin. No restaurant runs at a 32% net margin. The franchises run at like a single digit net margin. They average McDonald's makes like a 7 to 9% net margin. Its upfront costs are like $2 million, but it makes like a respectable $180,000 of take home profit a year on average. So the franchise does, but those are the bag holders. McDonald's, the corporation, is the real winners. They just collect their 4% royalty on every sale, no matter what, and they collect the rent, no matter what. Even in a recession, these franchises are still paying, and the sales go up if we go into a recession at a McDonald's because people stop going from like eating out, and maybe they'll go to buy a $5 meal deal or something there. Yeah, silver's like a meme coin today. Yeah, it hit an all-time high the day before. Same with gold. Silver, look at this. Look at the previous day. It was at 109. So it's kind of just like where it was 2 weeks ago, or not even. But yeah, it still doesn't look great, a 28% drop. And what else is falling? Yeah, Cavco, AppLovin, and dang, Innodata's down 14 now. I can't believe that. All right. Let's see. Hey, what up, Nick? I'm getting crushed today. Yeah, dude, me too. Me too. Y'all don't want to see my Roth IRA. Check this out. Our Roth. Yeah, I've been on the wait list for like 2 years. Thanks, Robinhood. But yeah, we're down 7.5%. RIP. Hit the like button on the stream for me. Our main portfolio, though, our dividend only account is down 1% on the day. Every stock is red. And every stock in here is red too, except for our kind of defense names. Our bottler, our Coca-Cola Consolidated bottler, and also Murphy, the convenience store, or not. It's like a gas station. How's Monster Beverage doing? I actually wonder. Monster Beverage is also kind of seen as like recession. Look at Monster Beverage stock. Just like an absolute multi-bagger of a stock here that just doesn't go down. So kind of like with Coca-Cola Consolidated too, they like do good in these environments. And see, it's like McDonald's too. They do good when the economy's struggling and when the economy's booming. Bull stock? Yeah, here, I'll get the Bull again. Yeah, I did buy Bull today. I bought nearly 10 shares of this one between today and yesterday. And it's a stock where even this is an all-time low. Weeble's at an all-time low. Even at this all-time low level, you don't trust anything meaningful in this stock because they're still expensive. They're still expensive even at the all-time low level. But I'm more bullish on them than the analysts are, so it's still worth owning, but as a super, super small position in my opinion. I'm down 18% on them. I got 69 shares. Here's my buy orders today. Yeah, the short interest, dang, 12% of all the shares are being shorted on Webull right here. So there's some short thesis, but I am more bullish than the analysts are on this company. Here's the revenue. It's good. It's up 55% year over year. I think they're going to continue this growth, and it's actually going to be better than what the analysts expect because I'm a Webull user. Here's my Webull portfolio right here. We haven't really done great. So that stock we're looking at, Bull, is just this app, this brokerage publicly traded. We're only up 12% all time, so definitely underperformed. But what I noticed right around the time, right after they IPO'd, is they introduced prediction markets and they introduced crypto to the app. Yeah, you're able to bet on the Super Bowl for zero commissions. So anyway, and you can buy crypto on this app. Now, whenever you go do those kind of transactions, a crypto or a prediction market contract, they keep a high margin commission fee, and that makes way more than when you just buy a stock. So because they just added those two features really recently, I don't know if analysts are fully pricing in the potential of how great it can be. So that's why I own Webull. They're still not really profitable, or they like the forward PE is a 50. So, but I just think they're cheap at a 3.2. I think that's what they're worth. They're 3.5 bill market cap, all time low. Not just because they're at an all time low, but just because the 3.5 bill market cap. That's why I think they're pretty attractive. And I'm more bullish than the analyst are. So I just think when it comes, you're holding Webull for the earnings reports. You're waiting for the next two times they report earnings because I think they're going to just crush it. Okay. Let's see here. Ouster's been down 12% today. OUST Ouster stock. Okay, they're on my watch list. I wonder why. I forget what they do. So Ouster, sale and production of LiDAR sensor kits. Oh, you know what? I remember this is like the best like LiDAR player. Like they're up. Look at the growth in the middle here. These year-over-year comps. It's up 40%. After grew 39. After grew 87. So they're on an absolute streak of growth, beating on expectations. They expected 37 mil. They did 39 mil. They're losing less net income than expected. So I guess that's a good sign. And the revenue growth is great. It's supposed to go from 32 mil to 42 mil year over year, and they slightly beat usually. So that's great top line growth. I can see why there is. I know the momentum's kind of slowing today because the whole market is, but I can see why they've had all this positive momentum because the earnings really are impressive. So that'll keep up the valuation, or that'll justify the momentum. And they're still losing a lot of money, 20 mil a quarter, but the losses are narrowing. Like it's definitely gotten better. Yeah, dang, look at what they used to lose, a lot more. So they have significantly narrowed their losses, and it's only getting better, which is good. And a good balance sheet. That's probably from diluting you as a shareholder. Yeah, but good balance sheet. So yeah, this is your LiDAR play. I was reading a report on them. They're actually, I got to do more research on this one because they really are impressive. So I think this is the company. Anyway, pretty cool there. I am down 13. You're down 13%. Dang, man. That sucks. Yeah, the market just like is not giving these stocks the benefit of the doubt today, or you must be in some precious metals or something too. Yeah, my Roth IRA is down 7%. Yeah. SoFi's getting beat up. You're right, V. So, yeah. Looking at Gilead Sciences. Gilead Sciences. Is that GILD? So, Gilead Sciences. So, wow. I think this is another gene editing, gene splitting company. I think it's a much better buy than CRISPR Therapeutics because I think this one actually has revenue. Or no, never mind. So, this is actually a prescription company. So, forget the gene editing stuff. But this company looks like they sell a bunch of different prescriptions. And so 50% of the revenue comes from this one right here. And I wonder how that's doing. The data's a little bit wacky there, but let's see. When we combine all these, what's their total revenue growth? So sales grew. Okay, so this is low single digits. Notice this, revenue's revenue's up 3% year over year, but it's low single digits, up 3, last quarter up 1.8, down 0.28, 6%. So low single digit growth rate, but I think that might have beat the expectations here. Yeah, analysts expected 7.4, they did 7.7. And whoa, this was the real winner, the margin expansion. They expected $1.69. They did $2.43. And that wasn't like by an adjustment. Like they really did beat that in profits. Like the EBIT beat by a huge amount. So what's their net margin? Wow, this company's rocking like 20 to 30% net margins. It was a 39% net margin this quarter. So they did 7.7 bill of revenue. On the 7.7 billion they netted and kept 3 billion. Even in the quarters before, they're always making over $1 billion to $2 billion net income a quarter. So super profitable. So that means their valuation is a 20. That potentially could stretch up higher. I think, the reason they've been at a 20 PE is because, of the single digit revenue growth, low single digit revenue growth. But if they're beating on expectation and it's coming back, maybe this forward PE could go a little higher. Who knows? I can see why they're at an all-time high. Pretty interesting there. AEVA stock. What's that one? Or wait, I typed that in wrong. AEVA. So Ava Technologies is the small one, so you do want to be careful. If you kind of look in the top right, they're only worth $750 million, So that's just a really tiny company. But let's see what they do. Non-reoccurring engineering services. So it's only a million. Like the year-over-year growth is so great, but the revenue is only 1.8 million this quarter. Product revenue is 1.7 mil. So that's why the whole company's only worth, 700 mil or something, because the revenue is only 3, 4, 5 million a quarter. But and dang, so they're lose. So that's the unfortunate part. We kind of think about this logically, like the whole company's worth 750 million. Let's say you buy it for $750 million. The whole company's worth 750 mil, and they're losing well over 130 million of net income a year. So you're losing like 15 to 20% of your market cap just in net income every year, or basically of your original investment. And the balance sheet doesn't look great. Kind of as you can see over time, the assets just slowly shrink, and now the liabilities. Like look at that over on the left. They had no liabilities and a bunch of cash. Now they have a lot of liabilities. It's like 65% of their total assets. So, I just be careful with that one. Just because it's a really small market cap, you just want to be careful with those. They're not really profitable yet, but yeah, I don't know. Pax Gold. What is the ticker for Pax Gold? Paxos Dollar. If you give me the ticker symbol for that, I know gold is just ticker symbol IAU. If you're looking for the commodity of gold in an ETF, they've recovered. They're only now down 9.2%. It was all the way down to like 88. Now it's at 92. So yeah, there's gold. Silver's down worse. So silver's down like 25, or it was. APLD or Iris Energy, yeah, those are both kind of the same industry kind of companies. They're both doing the data center stuff. So NVIDIA is giving these companies a bunch of money. NVIDIA owns big chunk of CoreWeave, APLD, Nebius. They all do the same thing. There's nothing too proprietary. That's why I don't love these. Like all these companies do, APLD, CoreWeave, Nebius, Iris Energy. All they literally do is they just own a bunch of GPUs in a data center. They just own a bunch of chips. And right now, these chips are in such demand from cloud computing companies. They're basically renting out the capacity, renting out these chips to cloud computing companies like the Azure Cloud. Microsoft Azure Cloud's doing a bunch of deals with like Nebius and Iris Energy. So yeah, basically hosting businesses, data center hosting. So that's what they do now. And they had a great quarter this quarter specifically. This is why the stock gapped up on earnings. It really was a good quarter. Analysts expected 81 mil of revenue, and they did 126 mil of revenue. And they lost less net income than expected. So I guess that's the good news there. They had a big top line revenue beat. So yeah. What are some good stocks to buy when the market is down? I like Microsoft at this price a lot. AppLovin's starting to look decent too. Toasty, what's up? He said AVAV. What's this? Is that Aero Environment? Okay, let's check this one out. So they're down 5.4% on the day. They're on my watch list too because I remember they've been beating on like analyst expectations a lot, and there's a lot of growth expected. So yeah, the revenue's up 150% year over year. I think it's from an acquisition. So yeah, here's the thing to know. As you can see, the assets changed dramatically 2 quarters ago. That's because they bought this company for over $1 billion. That's why the assets changed so much. So that's another reason why the revenue is growing triple digits the past 2 quarters because of the acquisition. But the revenue is going to go from 275 to 585. I want to look into more what their acquisition was. I don't remember exactly. Oh, check this out. Air Environment secures a $75 million U.S. Air Force contract for advanced materials deployment. So I bet that was a nice catalyst, but you can't escape today's pain apparently. So it looks like some aerospace and defense name. Here's kind of their website right here. So, all right, let's see what's next. So yeah, there's Aero Environment. Wait, were they profitable? I don't think so. So that's one thing to be careful with. You probably don't want to go crazy into them. So yeah, they're still losing a bit of money right now. Let me go to the operating profit. They're not losing that much money. All right, we'll look at a few more here, then I got to run. But I appreciate y'all being here. If y'all wanted to follow up on, we stream every day. Oh, Pax Gold. Oh, is this a crypto? I think this is just the crypto version of gold. So this is basically a gold proxy. So if you want exposure to gold, but via a token or crypto instead of like an ETF, you could do that, I think. Maybe I'm wrong there. I don't know. But yeah, they looked identical to the price of gold stock. Do you think AppLovin will go a bit lower after what Google announced? Hey, let me know what Google announced. I don't know what you're talking about. That sounds interesting. What did Google say? Literally the day I finally decided to buy SanDisk Dump, I thought SanDisk was up a bunch. SNDK, I thought they were up on earnings report. Oh, so yeah, they've lost a little bit of gains. Yeah, only up 1%, but they had a phenomenal earnings report. Yeah, it's definitely, it's hard buying. I feel you on that one. It's definitely tough buying SanDisk, on earnings day, the same day they reported at an all-time high. But I wouldn't go be too concerned, 'cause if you bought them today, and you plan to hold them for many, many months or years, it's kind of just unfortunate. But I just hold them, 29 forward PE. Your original thesis like has time to get back into reality. Um, I wouldn't go crazy in SanDisk, but yeah, they just reported good numbers. This is the memory shortage company. So if we go right here to the EPS projections, they're so good. EPS this quarter, they expected $3.20. They did $5.15. At that big of a beat, they're probably going to beat crazy on the next two quarters. So that's where the 29 forward PE comes in. Coca-Cola at an all-time high. Really? I bet Warren Buffett's happy about that. Yeah, exactly. This is what I've been saying. Like Monster Beverage, Coca-Cola, these kind of resilient companies do good in these environments. Yeah, dang. Congrats if you own Coca-Cola. I just made a video about them too. It's a nice little dividend growth company. It won't outperform, the super tech-heavy S&P 500 in the long run, but you'll get 3% of your money back in dividends and then 3% stock price appreciation a year, I think. I own Coca-Cola Consolidated, the bottler down here actually. So they've been an insanely good performer, one of the best performance stocks ever. So yeah, I do own Coca-Cola Consolidated. They're at like a 20 PE, like a 19 forward PE. Could you see App? Yeah, hey, should we look at AppLovin? Let me do AppLovin again. I'll be quick about this one because we already analyzed this one a couple times. So this will be the last time I cover it. But AppLovin, dang, right now as we speak, a new intraday low, a cheaper valuation than SoFi. Not crazy cheap, but on the right there, a 35 forward PE. And someone's saying Google released Project Genie, an AI that allows VR game development, sending games like AppLovin Unity stock tumbling. Wow, so I didn't realize it was because of Google. That's interesting there. Thanks for that news. I didn't know that. So here's the crazy part why I like AppLovin. If we go to the revenue this quarter, it was phenomenal. 1.4 billion. And here's the thing, out of this 1.4 billion of revenue, they netted after tax 835 mil. That's what I love about AppLovin. Like that's what makes this stock an absolute beast is this bottom line net income growth that's up 92% year over year, which means there's margin expansion. So their net margin this quarter was a 60%. The before tax number was 1.08, the after tax was 835. Like incredible net income and free cash flow here too. Another phenomenal metric. Record 1 billion of free cash flow, never been higher. Just everything here is headed in the right direction. Can find nothing to complain about. So yeah, that's why AppLovin I put to the top of my watch list because I really do like that one. Ulta is still going up. Let me check Ulta Beauty. This is one of my favorite beauty play because they print net income. Elf Beauty, they are struggling with margins and net income. Estate Lauder super struggling, but Ulta Beauty, they're not because they just have great products and it's just it's still negative, but it's a lot less worse than all the other companies. They print every quarter, no matter what, 2 to 400 million of real after-tax net income a quarter. Then they share that with you via buybacks. That's the number one way the company returns money to you. The net income fell 5% year over year, but the net income per share is slightly green. Same with last quarter. Net income grew 3.2, but the EPS grew by 9% because they bought back so much of their own stock. Pretty insane. They make $5 of EPS a quarter. And I think they're at a 19 forward PE. Han says Harley Davidson. Is that Hog? Is it HOG? I remembered it. So I don't love Harley Davidson because it's kind of like a commodity, low margin sale. Yeah, dang, this stock's at an all-time low. So what's their net margin? I am curious. Hopefully they have a net margin, So, they didn't make that this whoa, or hold on. So the revenue, here's the revenue we're looking at. Let me zoom out to get a better idea here. So the revenue's kind of been flat since 2018, or really, dang, since like 2012, the revenue's been flat. So the revenue's kind of flat. Here are the profits, here are the net income. So actually, they are on average making a bit of net income every quarter, I will say. They just deleveraged their balance sheet. They must have paid off a lot of debt. Yeah, they did. Hmm. So what's the forward PE there? Because they definitely have one. Oh, so yeah, a 16 forward PE. I mean, that's not nuts. I mean, Ford's at like a 13, I think. Harley Davidson Motor Company, Harley Davidson Finance Services. How's that doing? Main business is, I don't know. I just don't love a motorcycle. I don't know. I think, do they pay a dividend too? I don't think they. Oh, they do, a 3.6% dividend yield there. Interesting. All right. We'll look at like one or two more here. Chevron stock. Chevron, that's another Buffett holding. Buffett must be super happy today. If we go to Warren, where's Warren Buffett's? Here he is. Warren Buffett, 9.5% of his portfolio is in Coca-Cola, which is at an all-time high today. So if you've ever bought Coca-Cola, you're up on your money. And not just Coca-Cola, but also he owns Chevron. It's a big chunk of his portfolio. Oil stocks are a good hedge for, the kind of fear that's happening right now. So Chevron's actually up. We zoom out on this one, you're not going to, this has definitely not even kept up even close to the S&P 500. You're not going to outperform with oil stocks, the tech-heavy S&P, but what you do get is that resilience and that kind of defense exposure. Where in days like today, and random news like Venezuela getting oil supply taken off the grid, these do good in those environments, and you get a 4% dividend. So in the meantime, while you're waiting for that news to happen, you get 4% of your money back in a qualified dividend every year. Low valuation, a 26 PE on Chevron. So interesting. Ooh, Palantir. Yeah, he does own the slight. It's like 0.3% of his portfolio, but yeah, he does own some United Healthcare. UNH just tanked on some bad earnings, unfortunately. Yeah, Palantir, this is another one that's on my watch list. They're so good, so quality, but so expensive. Like insanely expensive. They're trading at like 90 times revenue, not 90 times net income, but 90 times revenue, 190 times next year's net income. But here's the thing about Palantir, why they're so impressive. A lot of the revenue comes from the government, like a lot of police stations and the military, the Air Force use Palantir software and products. And check out the growth. It's so good. It's up 55%, after grew 33, after grew 12, after grew 13. So literally the growth rate is growing. Like 55% year over year is incredible growth. And not just on the government revenue. Apparently, I forgot what it was, but they made Palantir, I forget what it was exactly, but they made like $6 billion just from ICE, which is like, that's why a lot of people don't like this one from maybe an ethics point of view. I think they legit made $6 billion from like ICE contracts already. But anyway, if we go to the commercial side of business, this is where the crazy growth happens with like other S&P 500 companies like Google. It's up 73% year over year. So incredible growth metrics, kind of in a uniquely position where like they're kind of treated like a military stock, but their software name. But anyway, they're actually like good AI play, like gives you actual useful uses for your data. So yeah, here's the net income, record net income this quarter, fortress balance sheet, literally no debt. Palantir is a debt-free company with like $6.8 billion of cash, earning interest every quarter. The free cash flow is insane as well. So there's nothing I can complain about on Palantir except the valuation, because all the metrics are good, just like Apple of them, but the valuation is still a little pricey at 190 forward PE. You think memory stocks will be good in 2026? I don't love the risk to reward. Dang, Micron's now down 5%. We were just looking at them; they were slightly up at the beginning of the stream. But yeah, I like Micron the most if I had to pick a shortage memory play, because the valuation on this one's the lowest out of all of them at a 10 forward PE, and they have the best like EPS growth. It's supposed to be $8 and then $9. So I think Micron their valuation, I think, will do great in 2026 at a 10 forward PE. I think that can stretch up to like a 13, send it up another 30%, even though they're at like an all-time high. So, did you like SoFi's results? I did. I did like SoFi's results. I am a shareholder of SoFi. I think they're just getting back to, yeah, I'm super happy with their results. Not super happy with the stock price, obviously, but they're kind of just getting back to reality and evaluation. You know, the PE ratio on the left is a 57, but the forward PE on the right is a 36. So it's starting to get better, but still a 36 forward PE is a little pricey. But SoFi certainly deserves a high multiple because of the high growth. Specifically, the metric you watch on SoFi is their financial services. No analyst expected this sort of growth. Like, it's so impressive. It's up 78% after 100% growth, after 141. Like, that's the kind of growth you want to trust if you're buying and holding a growth stock with a high valuation. You want to make sure it has high growth. And as we can see, they're beating on every analyst expectation. Like, they beat on revenue, they beat on EPS, which is net income, and they finally fixed their net income. So I really like SoFi, but they're still pricey at this point, and I'd nibble on them. I wouldn't go crazy on their stock yet. Virgin Galactic, this is one of the worst stocks I've ever seen, actually. Um, I have it on my watch list in case I ever wanted to short a stock, because this is a great example of why I look at financials. It explains why SoFi and Palantir are doing great and have high multiples, and explains why ticker symbol SPCE is at an all-time low. So this is, well, let me just go to the revenue right here. This is first off the first set of bad news. They don't have any revenue, or the revenue is 300 to 400,000 a quarter. So pretty much no revenue, 400K of revenue. And this is the bad part. They lose 60 to 70 million in net income a quarter, which is over 200 million a year, well over 200 million a year they're losing. And the whole entire company's market cap is worth 208 million. So think about this logically. Like, you could literally buy into this valuation. You could buy the whole company for $208 million. You'd be buying an asset that loses you over 200 million in net income a year. And it's not just like it's just this year's losses. Look at the cumulative, like, just losses they lose every year. Like, the whole company's worth 200 million. Just like this one quarter, they lost 150 mil. So I can totally see why this stock has had such a terrible, it says about 1,000 from all the reverse splits. I can see why it went from 1,000 a share to $2. I can totally understand it. The fundamentals are terrible. And it's unfortunate, but it always explains the stock price. That's why we look at that's why we always look at the fundamentals, because that's what moves the stock in the long run. Just bought into app right now. Hey, nice. I'd keep the allocation to app 11 super low here. Hey, what up, Money? I didn't know you're still in here. Yeah, hey, good to see you, Sexy Money. So UAL, I think that's an airline. I don't love the airlines, but I think they're doing great today. Not United Airlines. There was some other airline that was like up 17%. Was it? I don't remember. Maybe it was yesterday. There was some airline today or yesterday that was like up like 20%. So maybe it was LUV. Let me just check, because now it's bugging me. LUV stock. Yeah, look at them yesterday. Dang. I'm like, I need water. So yeah, they had a nice little gap up. I don't know if they reported earnings, but let me check out United Airlines. I don't love the airlines because historically they just don't keep up ever with the S&P 500. They get smoked in a recession. Like, they just get destroyed. But what's their valuation at? So a 7.7 forward PE. I can see why they're at a 7 forward PE, just because it's an airline. But yeah, let's see the revenue here. So the revenue has, you see here was the recession, going from 10 bill of revenue to, nothing. But now it's starting to recover. What about the bottom line here? So the bottom line has recovered as well. So that's good news. If we average it out, they really are making net income every quarter. So it's just that, like, these just don't keep up with the S&P 500 in the long run. So I wouldn't go crazy into United Airlines. But I mean, it's really not the worst stock ever. I mean, they don't pay a dividend, which I kind of like. So maybe they're doing share buybacks. Let's see. So the net income's up 6%. EPS is up by 8%. So they have bought back over 2% of all the shares the past year. But I don't love the airlines. I think the cruise lines are going up too. My DAL is up 150%. Dang, really, Ty? You must have bought them at a great price. I'll do the Trade Desk really quickly. So yeah, the Trade Desk, this is a CTV advertising company, and they're kind of being out innovated by Amazon right now. One of their largest customer, one of them used to be Netflix, but Netflix actually left the Trade Desk to go over to Amazon. And that was kind of there's also this Morningstar research that were saying, Amazon's demand side platform directly targets TTD's advertising space, and most advertising dollars are rooted to the ad giants like Google and Meta have no incentive to work with Trade Desk because it compresses their ad revenue. So anyway, it's like a TV advertising company. They make good net income here. That's the good news here. They really do make good money, 50 to 150 mil in net income a quarter. So they're a profitable business making good net income. It's just, I think the future growth outlook and just all the software names have been getting crushed, like ServiceNow and Salesforce. Yeah. So the forward PE is a 29. That's kind of fair. That's the risk to reward is starting to get better here. Like I could potentially maybe seeing them falling down to like a 25 forward PE, but really not much lower than that. So, wish I could give you better thoughts on the Trade Desk here. I'm not crazy bullish on I like Meta as an advertiser, but like Meta's at a 20. I like Meta and Netflix more. I'd buy Netflix stock over this one on a dip. Like Netflix also had a 52-week low. Meta's not. Meta just had some great numbers. I love Meta. You think about Qualcomm at this price. Yeah, this is an interesting like royalty 5G play, actually. I like a 15 PE, I think. Look on the right there, a 15 forward PE. So I was reading the Morningstar research about this one too. Check out the very top line here. Qualcomm collects royalty income on the majority of 4G and 5G handsets sold, as it holds many essential patents used in these networks. So they're collecting royalty income every quarter. So we can see their smartphone chip market share at 24%. I think they own Snapdragon. If anyone's heard of that. But yeah, they haven't been doing too well, but it's like a nice dividend growth stock in my opinion. You want a company with a 2.3% yield that they're going to raise every year. They don't actually have a 69% payout ratio. They really have like a 30% payout ratio because they had a one-time adjustment to their net income, as you'll see in a second here. If this net income level, here's the EPS. The EPS is just net income. Yeah. So here's the net income. It says they lost $3.12 billion. They didn't actually, the profits grew 6% year over year. So kind of ignore this quarter, but that's why the current PE ratio looks high versus the forward PE. So yeah, anyway, interesting one there, 2.3% yield. But yeah, 15 PE, that's a really fair valuation, I think, for Qualcomm. But I know they maybe are just seeing increased competition, like Apple's partnering with Broadcom, and Taiwan, or I think actually Apple's partnering with Taiwan Semiconductor to make their own like smartphone chip, where Apple just has their own chip now. So, why your last account got banned? I don't know what you're talking about there, Tez. This is my like basically only TikTok account. So yeah, if someone got banned, it must be because they're impersonating me. Please watch out for people impersonating me. This is my only TikTok account. I'll never follow you, DM you. I literally sell nothing. I sell nothing at all. I have no course, book, WhatsApp. I don't coach, nothing like that. Just on here to give my opinion. Then we've been live for 2 hours and 7 minutes. This has been fun. Let me end this with a quick portfolio update. And for Palo Alto Networks. Let me get to Palo Alto Networks. You know what? Palo Alto Networks is a great cybersecurity play. It's in the Nancy Pelosi portfolio. So Nancy Pelosi does own Palo Alto Networks, but it's fallen here. So this is a cybersecurity play. They're a subscription model cybersecurity play. And I think cybersecurity is one of the more immune parts of software. Like you look at Adobe, you look at Salesforce, and ServiceNow. They're really getting hurt hard, but I think cybersecurity isn't getting hit as much because I think cybersecurity is kind of immune because hackers will utilize AI and the demand for cybersecurity should only be growing. Like the industry CAGR is crazy. So yeah, 55% of this company's revenue is their subscription model. I love subscription model companies. It's all like recurring revenue. And that subscription revenue, like if you're going to hold a high PE growth stock, this is what you want to see. This is so good, double-digit growth to that business. Like, let's just check out the total revenue here. Your revenue's up 15 after 13. The numbers are big. And they're net income positive. They're making 200 million net income a quarter. Now, the margins have been coming down a little bit, but that's just kind of normal for the whole cybersecurity space right now. Anyway, super profitable. I think over 50% of the S&P 500 are actually customers of Palo Alto Network. They're also trying to acquire. Oh, look at that. Palo Alto completes acquisition of Chronosphere to enhance AI-driven security. South Africa approves Palo Alto Network's acquisition of CyberArk. Oh, cool. So yeah, they're also buying CyberArk. So they're doing some acquisitions that's going to bring even more growth to the business. CyberArk's also publicly traded. Palo Alto Network's position for growth in quantum safe cybersecurity through IBM partnerships. So, anyway, great cybersecurity name if you're looking for cybersecurity exposure. It is the most quality one out there. I mean, maybe besides CrowdStrike, but that's like the best or second best one to exist. What app is that? Hey, this is a brokerage. If you want to get this app I'm on, it's actually in the link tree in my bio, very first link there. It's where you buy stocks. And I love the analysis tools. Yeah, if you want to get it with my affiliate link tree in bio, first link there. It's a brokerage called Moomoo. Or by the way, all these apps are all in the link tree in my bio. They all, ask for a bunch of information, send you a tax form because they're all brokerages. All three of these apps are all in the link tree in my bio. But yeah, this one is my favorite. No commissions, no fees, costs nothing. Literally no monthly fees or costs at all. You get a 3.35% APY and you're just idle cash sitting in there. And it has the best analysis tools like the Nancy Pelosi tracker and all that. So yeah, if you want, it's my affiliate link and help me out. Link tree in bio, first link there. But that wraps up the stream. I hope you guys have a great rest of your day. Make sure to hit the follow button if you want. We're going to be live tomorrow. We should try to stream every single day. So see you soon. Thanks to everyone on both streams. If you want to support me too. If you do want to support me, there's one way to support me. The best way too, because I sell nothing, is just subscribe to my YouTube channel. It's just called Nathan Roberts. Also in the link tree in my bio. You can just type in YouTube Nathan Roberts. Oh, portfolio check. Yeah, let me do a portfolio update because the market did fall. Then we'll end it. So yeah, our Robinhood portfolio, we're down 0.85% on the day. It's our main dividend-only account. Looks like Google's slightly green. Carlisle's trying to go green here. How's the S&P 500 doing? Oh, the S&P 500 has been recovering. Okay, that's great news. So S&P is only down 0.31% now. Let's go check out. Y'all don't want to see my Roth IRA. Yo, RIP the Roth. We're down 7.8% in the Roth IRA. So hit the like on the stream for that. And hey, shout out Bryce. Thanks for that gift there. I do appreciate that, Bryce. But yeah, our Roth IRA is pretty down bad today, mainly by Cavco, which is down 20%. Oh, the market closes in 7 minutes. And then we have our Webull portfolio, which we haven't done too great. I love being fully transparent all time. We're only up 12.7%, and we're only up 2%. Or no, we're down 2% on the day. Mainly led by, AMD. SoFi's down 7, Reddit's down 5, UiPath is down 5, PSIX is down 5. So RIP those positions on the day. And then finally, we have our Moomoo portfolio. This is known as our buy and never sell portfolio because once we buy a stock in here, I never sell it. I just diamond hand it. And these are all the stocks that we own in here. We're down 1.77% on the day. So you can come back to my stream in a couple years. We'll own all these exact same stocks. In a perfect world. So, yeah, I'll see y'all soon. How are we doing year to date in here? Yeah, dang, even though we're still up 14% year to date, mainly from Comfort Systems and Powell Industries. Powell Industries hit an all-time high today, but has fallen a little bit. I can't believe the stock price appreciation on this one. But anyway, see you soon. Thanks again if you're still here. Hit the like button if you haven't already. It still does help me out. But thanks again. Hit the follow button. Oh, and subscribe to the YouTube channel called Nathan Robert, link tree in bio. And you can replay the stream too if you missed anything, see more in-depth analysis. Hey, thank y'all. Mr. Nahor1, Pulse, Zing. Oh, I wanted to get to Unity. My bad there, Zing Kong. I totally missed Unity. That's my bad. Rule, Travis, 6 star, Jose, Juan. Thanks everyone.